You guys, you guys, what a day it has been. Chad, what day is it? I don't remember.
I think it's the Thors of the days.
Damn right it is. It is Thursday, baby. It is the day of the week. It's a day I love. I probably love it too much. Hi everybody. Before I do the introduction, I don't know if you guys saw, there was an amazing video done by JP and Kenton. So after you're done watching this, make sure to go check that out where they demonstrated XMR functioning in a chainnet environment. I have not finished the video myself. I just had to stop midway through it. But wow, what a banger. Shout out to you, Kenton. I had such FOMO I couldn't be there. I'm so mad, but it is what it is, you guys. Sometimes you can't
It,
do it. But let's go ahead.
it
Go
was
ahead,
just
Kenton.
it was just a fluke for me that I could make it. I have another meeting at that time and it canceled. So then I was able to go. So yeah, it's great.
Yeah, it's hard to collaborate, Australians and Americans time zone. It's just a difficult thing, but good job to you, man. Thank you for waking up early and doing that. But let's get this intro out of the way, you guys. For those who don't know, THORChain is the world's leading Bitcoin DEX. You can swap 13 different blockchains across 41 different pools without using bridges or wrap tokens. Check it out at swap.thorchain.org, swap.thorchain.org. Anyone in the world can use THORChain. There's no account to open, no KYC required, and privacy is a human right. THORChain has two tokens, Rune and TCY. The fees for swapping on THORChain are paid in Rune, and that's where the yield comes from. The fees are deducted from swaps, so you do not need to own Rune to trade on THORChain. That's pretty cool. The Rune token is deflationary as 5% of the revenue is burned. 10% of protocol revenue goes to TCY token holders. Remember to stake the TCY tokens in order to collect this yield. There are no block rewards. The protocol's revenue is real money paid by real users. THORChain is more than just a DEX. It is a programmable layer 1 with the ability to create decentralized apps on it. This app layer is being developed by Rajira, and they will be joining us today. If you need help at all with THORChain in general, join the THORChain community Discord and Telegram group. Links for those are on THORChain.org, THORChain.org. You guys, please follow THORChain on Facebook and Instagram. THORChain contact on TikTok. We were just messing with this before the show. We need 1,000 followers so we can live stream on there, guys. Let's get that number up. And always remember, guys, this podcast is for informational and educational purposes only and does not constitute financial, investment, or legal advice. And the THORChain community does not endorse or condone any illicit activity of any kind. And with that out of the way, you guys, how is everyone doing? My name's Denny. I love doing this stuff. I go by Patriot Sounds on X. I've been educating for THORChain for a while now. I'm going to kick it to my main man, Kenton. How you doing, Kenton?
Yeah, good man. I'm really stoked to have Hans and Pragmatic Monkey here with us and Chaz. This should be a good one. And so I'll be quick, you guys. I'll just give a quick little update on my end. First off, CoinGecko is awesome. CoinMarketCap, not awesome. So CoinGecko has been great. If you look at the supply numbers, they should all be updated for Rune and TCY. So it looks like they got the max supply for Rune pointing to our API. So those numbers should be dynamic. They should update real time. I did get the supply numbers going updated on CoinMarketCap, except the Rune max supply, I think I'm still going to work on them. Hopefully they can connect that to the API to be live updated as well. But at least it's down to 360 million. So at least, we got in the right direction there. But I got to let you guys know, run into a snag here with CoinMarketCap. The changing from 9 Realms API to Liquify, we lost our exchange data on CoinMarketCap. And we didn't have our full data there. It was like, we had like a partial integration or something, if you want. Like, we're missing all the trading pairs, but they were still able to pull up the prices. And if you remember me several months ago saying, they wanted 50 grand to do a full exchange integration. Anyway, now that we lost the 9 Realms API, we've lost everything. There's zero exchange data on CoinMarketCap. And so I'm trying to get at least the basics, what we had before, back up. And they're not even doing that. And they're basically, I don't know if this is extortion or what, but so and I've talked to people about CoinMarketCap who like know guys that used to work there and, insiders, this kind of stuff. And everyone's saying that's the price. They will not budge. There's no other way to negotiate. That's it. And so because of this, we can't get a price feed on TCY because CoinMarketCap will only pull price feeds from exchanges that they already have integrated on CoinMarketCap. So I don't know. I'm starting to come to the realization that I think we're just going to have to pay to get it done. So I'm going to talk to Scorch about it, and we'll figure it out. But to give you guys a heads up that we lost that on CoinMarketCap, and I'm not having much luck getting it back. So we're gonna have to bite the bullet and just pay. So that's it for me. Let's talk about something more positive. I don't know if anyone in the audience knows, we have ADR 27 going on right now, which is a proposal to give app layer basically no commissions, no fees on trades being done with the base layer to arbitrage the base layer and help tighten in the spreads to give THORChain base layer better quotes. And there's been some back and forth in Discord on it. A little bit of contention. People have some concerns and worries. So I thought, why don't we just get Hands and Pragmatic Monkey, come talk about it. Chad's here. Maybe he can help ask some questions. But I said it'd be great to chat, and you guys are here, so great. Thank you for coming. This is awesome, and it's always good just to be able to talk. If there's some like
Yes.
confrontation or misunderstandings or whatever on text, like so. If anyone in the audience, if you guys like, I don't know if Boone's out there, you guys are welcome to come up too to ask questions. But I'll give it off to Pragmatic Monkey and Hands, maybe just to kind of do a better job of me explaining what you guys want to do here and why it's good for THORChain.
Yeah, cool. Thank you. Thanks for having us. It's first time on Thursday. Exciting. Yeah, I mean, it's been a journey, hasn't it? We've Blair kicked off quite 18 months ago now. Wow. I think it took like 6 months to get the Cosmize and PR merged, and yeah, we kind of tick away, and over that time, I guess we sort of communities have intermingled and aligned, and I think yeah, it's feeling pretty good. I think that we started this off as kind of like the THORChain tech is outstanding. The connectivity to layer ones, and I remember like writing that the first merge request was secured assets, and thinking like, this is insane. I've got like this TXN struct thing, and that just represents a transaction on any blockchain. I don't have to think about it. It blew my mind coming from where we were. But the whole thing has mutated, and kind of we've like kind of, I think, merged holistically, if not token-wise, and that's the complete different thing. We're not going to talk about that. And we are in this place now where I think kind of we all sort of like, particularly from us from a team, like we just want to support this whole stack, like the complete vertical integration of how THORChain operates, how it delivers quotes, how it executes its swaps. And this is kind of like the basis of what this vote is about. It's not. I think it's been kind of slightly misrepresented, and actually, to your point, Kenton, to say the vote is to remove fees. Like the CLP formula that THORChain uses is unique to THORChain, and you can't bypass fees because fees get charged on the size of your swap and the amount that it moves the pool. What MinSlip does is it creates a floor, like a minimum that you're allowed to swap in order to guarantee that kind of that minimum fee on a code level. And the vote is to remove that floor for a specific contract on the app layer, so that we can then have more general discussions, and it gives a contract more ability to stabilize those base layer pools, and it stabilizes them against user deposits of liquidity on concentrated liquidity positions, which we call custom concentrated liquidity, because you have custom spreads, you have custom skews, you have kind of things like that, which you don't have on Uniswap v3. And we'll be bringing in, more kind of Oracle-based trading strategies, dynamic concentrated liquidity, that kind of thing, which will adjust your bid-ask spread based on your trading history and what the current Oracle price is, a lot like Near Intents does, to a degree. And so this is the whole point of the vote. It's not to try and bypass fees. It's not because we're trying to kind of get some kind of like privileged access. It's because we kind of see this whole thing as this holistic, unified system. And what we want to do is unlock sophisticated liquidity deposits on the app layer, which is something that would be dangerous to do on the base layer, right? Like we could have, instead of writing the whole app layer, we could have written a merge request to do custom concentrated liquidity, dynamic concentrated liquidity, everything that we're doing on the app layer. We could open a merge request and say, hey, look, here's our Go code. Just merge it into the base layer and channel turn around and tell me to disappear, because that is way too high risk, right? Or it's something that we're going to have to iterate over 6 months, 12 months, 18 months, a long time. Whereas the architecture we've got here, and it's really just a software architecture kind of thing, is that you have this very stable, very well tested, very secure base layer, and the way it executes swaps is great. And instead of trying to like integrate your code on all these different points in that kind of software stack, we've just got this nice one single entry point. It's the swap memo, and we swap with a secured asset. And by setting the min slip bips to 0, it allows this kind of perfect transmission of liquidity between the two. So you remove all the kind of economic boundaries between the two. We still have, this kind of unified, holistic discussion around what should the minimum dislocation be before an arbitrage, or like a correction, or whatever you want to call it, right, is executed between that player and base layer. And currently, notionally, that's 2.5 bips. It could be 5, it could be 10, whatever. And whatever that is then split between that and base layer. And the point that's been made in Discord is actually that we'll get onto this, I'm sure, but there's a sort of a chasm between 0 bips and 20 bips where nobody arbitrages it, and the prices are allowed to dislocate, and you get worse quotes on the from your quote 10 point. So kind of I'll wrap this all up now. But like the point is, it's not, nobody's trying to bypass fees. Quite the opposite. Like we all win if we maximize the fee generation, but we maximize fee generation by maximizing flows, and you maximize flows by offering the best quotes and giving the end users in these integrations, in these wallets, the best possible price for the swaps they want to execute. And that's basically just what drives this whole incentive here.
So there's still going to be fees charged on Rajira, on app layer, to do all this trading and whatnot, right?
Yes, obviously. And the fees that we charge as per ADR, I can't remember what number it was now, are 50-50 split. Anything that gets executed through the base layer that is used to kind of stabilize those base layer pools pays CLP fees. There's been a couple of comments around, now, does app layer now provide preferential swap routes versus base layer? And that is just, if there is an avenue for that, then we shut that down, because that is not desirable. It's not something that we want out of this whole kind of this partnership, this ecosystem. But I don't think there is, because there is the CLP fees that you pay regardless. All we're doing is flooring it, or removing the floor, which was previously at 10. And there's going to be a 2.5 bips charge on the virtualization contract, and a 15 bips charge on a taker fee. So there's going to be, as it stands with the current fee structure, maybe a very small number of marginal trades that might be 1 or 2 bips preferable. But it's and we can plug that gap if we need to. It's not there's not the motivation here.
So my simple brain thinks that this is going to crowd out existing arbitrage, our bots. But correct me if I'm wrong, Hans, but did you say that actually won't happen? Like arbs will continue as is? It shouldn't affect
Yeah,
people?
they absolutely will. Yeah, absolutely. Actually we talked about this on Deadpool earlier, but there's the kind of the vision which is completely preposterous, but you've got to shoot towards, is that THORChain has the liquidity, has more liquidity than Binance, has more liquidity than Kraken, has more liquidity than all the exchanges, and so they're arbitraging with us. We are the source of truth, the source of the price, but that's not the case. And so what we can do is we can attract more liquidity deposits, the same as the more liquidity you get in the base layer pool, the ones that are open, the better swap execution. The larger the chunk size is for streaming swap, and the smaller dislocation you get for a smaller swap. So that should be the goal, to grow liquidity, improve execution quality. But ultimately, we're not going to, in the short term at any rate, short, medium, or near long term, going to attract as much liquidity, as much trading as some of these centralized exchanges. And so, we'll use the liquidity we can attract in concentrated liquidity positions, which will be more efficient. They will stabilize the base layer pools better. They'll make more money for the depositors that put these positions down. But, it's not going to cover everything, right? Like the other day, someone did a 33 Bitcoin swap in half an hour. Like there was very few venues are going to be able to cover that. So those kind of things, and not just that extreme, right? That is an extreme example, but you're going to get kind of in the natural flow of things, you will have it breaking out of the bounds that the liquidity on THORChain is able to cover, and third party arbitrage is still going to be critical in handling that.
So with concentrated liquidity on app layer, will it be much more efficient to keep those spreads tighter? Or is it basically just like the way I view it is just like we're just automating an arbitrage bot. It's just being programmed into.
I mean, to a degree, I think that's for semantics. It's if you look at some of the order books now, if you go on Jira and look at the BTC USDC order book, I imagine the spread is at about 5 bips or something, or what it was earlier. Really tight spreads versus the kind of organic spread that you get on a base layer swap is naturally 20 bips, right, or 40 even, because for any given price you pay 20 to go one way or 20 to go the other way. So you've got quite a wide spread there. And you execute that swap, and suddenly your pool moves by 20 bips in that direction. And after one swap, if that is at the that kind of size chunk, whatever is the Bitcoin room pair, like $15,000 swap, it moves it by 20 bips or 10 bips in that pool. There's still no incentive to move it back, right? So now you're 10 bips dislocated from the market price, and there's no arbitrage route to move it back, because arbitragers have to pay 10 bips on top of whatever they want to make in profit. So suddenly you're 10 bips dislocated. And okay, hopefully you'll win a trade that goes in the other direction, because you have a slightly better rate than the market. But there's no real kind of like structural protocol level mechanism to keep your pools pegged really tightly. Our concentrated liquidity positions have single digit bip spreads, so they will, with this MIMA value set to 0, they will have the ability to move those pools back to market price within single digit bips, and offer better quotes to people coming onto integrators, onto wallets, onto anywhere, and asking, say, how much am I going to get for XYZ?
Yeah, I think this is one of the important things I think the community should know, is that when you charge 10 bips to do a trade, like a secured asset, to do an arbitrage, the pool price cannot equal the market price. It's mathematically impossible. You can only get within 10 bips in one direction or the other, either below it or above it. And with that, our pricing takes that into account. So if we charge 10 bips on the trade, and we're also 10 bips off the price, we're actually charging 20 instead of charging 10. We've just doubled our price, not our fees. Our fees stay the same as 10 bips, but the price is 2 times what we're actually charging, right? And because of that, it's harder to win bids against near and chain flipping competition. And so, like, overall, we're trying to do better, perform better in terms of fees and swaps, and just get more fees and get more swaps. And there's multiple angles of which we're simultaneously attacking, like a perfect storm, if you want to call that, attacking from 3 different angles simultaneously. One is getting the pool price and the market price to be like the same number, which is what you need to have 0 bip trading to achieve that goal, or at least that's one of the most common ways to go at it. There's other ways, like I think concentrated liquidity might help in some ways, possibly, I'm not sure, but then there's the dynamic fee model, and then there's also rev share. Like, these things together combined is creating like a trifecta kind of like attack, if you want to call it that, and being much more competitive in the market, and should result in a lot more trades, a lot more volume, a lot more fees being collected. But I would also say what's really important here is that, like, there's a huge upside to what Ruji team is offering to the base layer. It's like a really important and really valuable thing of like, they could remove one of the biggest problems we have with our swapping, which is the slippage, right? In a matter of speaking, right? And so there's a huge upside, and the downside is it doesn't work as well as you thought. We're net losing fees, possibly. And if that's the case, we can just flip it off. You know what I mean? We can just do another Mimir vote and just turn it off. Like that, like it's such an asymmetric kind of like move of like there's huge upsides, very little downsides, and if we have any downsides, we can just flip it off, and we go back to the way it is today.
Yeah.
And then at least then we're like, we learn a bunch of new information. Maybe we learn something about what their approach that's not working so great, but then they figured, oh, we didn't account for this or whatever that might be, and make some improvements to it and learn and grow and become stronger at the other side of it. So to me, this is a no-brainer, at least to throw it off like as an experiment and to try it. And if it doesn't work, we can turn it off. If it does work, then we just like had doubled our efficiency more or less in terms of our ability to do trades at better pricing and more competitive pricing.
It's not even near so much I'm worried about competing with. It's Change now. These other like the providers that aren't on SwapKit that we still compete with, like in Ledger, for example, right?
That's true for Changely and Change Now and all those other, even Coinbase and Binance. It's true there too.
We got to beat those guys. So like their trifecta, I think it's a good way of looking at it, because the either we oh shoot, I'm brain farting now. The trifecta is we're going to charge less on our base layer fees to try and get more trades. We're going to give some of our fees to the integrator. So that's, again, we're getting less to try and get more trades. And then now with if we're going to make less fees on arbitrage trading, we're getting less to try and get more trades. So in all of these, some way, some form, we have to be, we're willing to risk and give up some money to try and get a lot. We're trying to make the trades as cheap as we can so we can get a lot more. And so this is some people's concern about the WASM fee going to zero, is that THORChain is going to see a net reduction in revenue because so much of our fees comes from ARB volume. But maybe we start getting a lot more L1 volume out of this.
Yeah, but even like
any drop in ARB volume.
Like, but the ARBs can't ARB closer than 10 bips in any particular pool, right? So if they ARB from 10 bips to 0 bips, that's not losing anything, because the ARBs would never touch that ARB opportunity, because there's no money to be had there. There's no profits to be had. It would be you losing money if you were ARBing that. And so like if they're ARBing from 10 bips to 0 bips, whatever, in terms of the price relative to market, there's no loss in that scenario. If it's above 10, then there is possibly some opportunity for loss in that scenario, to be clear. But like we have to find a way to get our pricing to be more precise to the market, because something like Near and using Intense doesn't have slippage. They have an oracle, and that's the price, and there's zero slippage in their particular design. And in order to be competitive, we need to figure out a methodology of being more competitive on that slippage.
Oleg, I'm really glad you came, because I don't think I'm doing a good job representing all the dissenting concerns and questions. So I'm glad you're here to ask questions. So I'll let you go for it, man. Thanks for coming.
Yeah, of course. It's definitely hard because I definitely don't have a strong mastery of all the topics that are involved. I think the maths behind the liquidity model that THORChain uses, I get most of it. I understand where the slippage goes, why it's incurred, why it's there. I understand most of the formulas for the fees. I've reverse engineered them. I've run an ARB bot for a few months, maybe a year ago or 2 years ago. But yeah, I definitely like the concept. Probably there is a middle ground or a value where the pie is just bigger for everyone. But the immediate, let's try 0 bips, to me, raise a lot of questions. And I also have just like plain questions. Chad, you say that like if the opportunity is smaller than 10 bips, that there is no arbitrage opportunity. and this might be a misconception of mine, but my understanding is that this is not strictly true because you're always arbing between what is the current state of the pool and different external markets. So because the value is 10 bips, there is always larger than 10 bips differences between different venues. So if most of the liquidity and the price discovery was already happening on THORChain, and THORChain was infinitely more liquid than all the other venues, what you say would be true. But my understanding is that while THORChain is not the place where price discovery happens, if the THORChain price, or let's just take the Bitcoin price, is exactly at $80,000 per Bitcoin, let's just say Bitcoin to USDT, then there is necessarily on the market, there's always a venue that will be 15 bips above and 15 bips below. So because that value is 10 bips is really small, there are still opportunities. There are no like true dead zone. And this is what I think is important, is that when you have multiple arbitrage actors that are all independent, they can look at all of those venues. They can look at 20 different venues and arb all the opportunities that are within or more than 10 or 15 bips so that they can grab profit between what THORChain is at point X in time and external venue A, let's just call it that. Then if we move everything to a contract, that means that this team now has the responsibility to match all of what the arbitrageurs are doing. Let's just say that the smart contract is really, really done, that Ruggiero is doing very, very well, and it's capturing a lot of opportunities.
Can we stop for a sec? Was that my internet or Oleg's? You kind of cut out there. Can you repeat that?
I think that
I heard him okay.
I heard the whole thing.
It's mine then. Sorry, guys. Okay.
No problem. But I think it was a good point also to just let the others chime in and see where I get some points and where I'm wrong.
I jump in quick here. I think so. You say Ruggiero does really well and replays those arbitrage, but that's really not the point here. The core point is really reduce friction in liquidity transmission between the base layer and the app layer. What's the way you can see the app layer and the liquidity and how much it can arbitrage? It's really an isolated island inside THORChain. We have zero intention to run our bots that arbitrage against external venues, and there will always be a lot of opportunities for those participants to arbitrage, and that's not our job, and that's not what we are going to do, and we could not do it with a smart contract anyway. What we can do is just arbitraging, build a buffer of liquidity on the app layer with more efficient strategy. And as long as there is sufficient deviation versus the base layer price, use this buffer as a first resort to rebalance the pool. And that we can do more efficiently than most arbitrageurs because we can do it in the same block and we have way less uncertainties, and somebody that has to move asset around to a centralized exchange may have some delay of outbound transactions, this type of things. Here, like in the same block, at the end of the block, we can just, if there is liquidity, rebalance. And that's really like that's the more we can, and it's not zero fee, it's just floor to zero, but there will always be the slip fee, regular slip fees, depending on the size of the swap. So this zero fee, really or very low fees, really apply on very small movements. That's most likely anyway. Regular arbitrager will never touch. But now we can have like a lot of very small opportunity, but that happen every block. That's hopefully when you add them up together, amount to something quite big. And maybe
Yeah,
go ahead.
That's just essentially impossible. Like it's impossible for Ruggiero or smart contracts or anybody to try and compete with somebody that's arbitraging against external venues. Like it's a different type of game.
Yeah, of course. But you can still, even if it's not the intent, and even if they don't overlap precisely, you can still impact what they're doing. So my understanding is that one of the intents is to try and arbitrage all of the smallest opportunities. And let me just point out also that I'm not sure we can say slip fee here. There's a liquidity fee on THORChain and there's slip that gets incurred, but it's not paid to anyone. That's an artifact of how the formula works, and it just creates an imbalance. It's represented in every quote. It's definitely important, but there are no slip fees. Even if the fee goes to zero, then the smart contract can make infinitely small trades and pay virtually very close to approaching the limit of zero liquidity fee to THORChain. Yes, there will be slippage, but it's not paid to anyone. It's just there. Then if you arbitrage all of those small opportunities, the implicit goal that is not necessarily bad in itself is to try and go to a median price, like as much as possible in the middle. By doing so, you can reduce the opportunities for external arbitrageurs that arbitrage with external markets. Because if the pool price is always perfectly in the middle, well, if it was 5 bips to the left, then it could have created an opportunity for an arbitrager between the 5 basis point difference and one of the extreme on the external venues. So even though you cannot replace them, you're not doing the same job, you can still impact their work and change how much fee gets generated on THORChain, because you can impact the people that are paying currently 10 bips liquidity fee to THORChain.
So you're saying that a pool price dislocating from an external price less than it currently is a bad thing.
It's not a bad thing. I'm saying it's a consequence of what you're suggesting. And this is where most of my questions come from. What are the impacts of this? And this just brings up a lot of questions. How will that impact the arbitrager? Does it create more opportunities for them? Does it create less? I tend to think it will create less, but I still think that's an important question that needs careful consideration before just dropping the value to 0.
Yeah,
Yeah,
honestly,
I mean, yeah.
Okay.
Go on.
I was gonna say, like, I have seen a lot of that in Discord, like people asking for like what's gonna be the impact, but we are touching the market microstructure. You can't really know till you experiment. That's why we need to experiment. But also the reality is, yeah, I mean, for sure, because we are altering the microstructure of the market, there will be some impact somehow. The
Right. And this is where 90% of fees come from THORChain. So isn't there a strong responsibility on the proposer of this idea to kind of do a lot of homework to kind of convince everyone that they have thought of everything and that this is very likely to be a good idea? This is where my pushback is it seems like it's a short paragraph and let's just see what it does. To me, the barrier for making a change that can have an impact on such a large piece of THORChain in its revenue deserves like a really, really high bar of research and good arguments to make sure that we're trying this with like a high likelihood of success, not just blindly trying and seeing what will happen.
But I like that's part of the issue is it's a very, very complicated thing, and you can come in and have an opinion that the effect is this, and I might come in and say the effect is that, and both opinions are valid. Like maybe I'm right and you're wrong, maybe you're right and I'm wrong, right? And like spending 3 months in a mathematical hole trying to calculate for all the things, to me is just like not worth the energy or time. We can just flip it on, even for like a couple weeks, and try it out. And if it doesn't work, that's perfectly fine. And we flip it to 5 bips or to 7 bips or 2 bips or back to 10.
So
I don't know.
Can
then we actually
instead
have
of
like
moving
at least then
from
we actually
10 to
have
0,
real data that we have real information and real data that can inform us about the results of whatever it is we're doing. And then we can say, okay, this took out too much. Let's try 5 bips and see how that reacts. And similar to how we did the min bip fee test earlier this year when Formula Cow and a couple others did an experiment where we set the bips at 1, we set the bips at 5, at 10, at 20, at 15, at 9, and we just changed every few weeks to figure out what the result is, because you can't really know what the result's going to be because there's just too many factors, there's too many market conditions. It's nearly impossible to actually come up with some discrete and deterministic answer to the question. So for me, it's just like it's worth the test. If we lose some revenue over 2 weeks, for me, it's not a big deal, and we'll learn a lot about the market and about what works and what doesn't work and why it worked or why it didn't work, and then we can go back to the drawing board and figure out another way to solve the root problem, which is to not have so much slippage on our trades, so we can become more competitive in the market.
And isn't it more prudent to maybe flip from 10 to 5 and see what is the impact? And yeah.
Yeah, so
Not my
that's
opinion.
also the thing. I mean, we could do, like, for me, I mean, it's perfectly fine. We should experiment with different level, but there is another consideration to have. This is literally going to have 0 impact over the next 4 weeks. I saw earlier, I think it was Slambammer who posted a reminder for people to vote and say the experiment will run for 4 weeks. I mean, we can do that, no problem, but this is not going to give any good data because there is still a lot of things we need to do. Like, we need to build more liquidity on the app layer. currently we are all like arguing for like the virtualization strategy. I think generate like $20 of fee in average per day it pays to the base layer in fees. It's very tiny. There is like in blue chip assets less than $500,000 of liquidity on the app layer, and it's in concentrated liquidity on fairly wide range. So the actual liquidity around the price at any point in time is a very a small fraction of that. So we are not gonna, and we still need to add DCL, dynamic concentrated liquidity, which will reprice with the oracles. Like there are a few we need to update the quoting logic, but we will only do it what we have the consensus. But the quoting logic of the virtualization strategy to put smaller quotes closer to the price, depending on what this WASM fee is. But we are not like it's not going to have any visible impact in the coming few months, like very unlikely. So we can set it to 0, we can set it to 5 bips. I don't think it will change anything. And I think in 4 weeks, there will not be any good conclusion to draw on that. Like maybe just what we start
Pragmatic Monkey, is that because there's the liquidity is small on the app layer, that it won't be enough liquidity to move to affect the prices on base layer?
Yeah, I wanted to share my screen earlier just to show visually on the order book what it looks like. I'm gonna do that in a minute.
You can go ahead.
Okay, yeah, I'll.
On the bottom it says share. Don't click leave.
Okay.
Either that or post the link in the chat, and Denny can do it or something.
Yeah, whatever you want to do.
Okay, so can you
There's
see?
a chicken and egg situation here as well, right?
Yeah.
Like the more that these CCL ranges get used in this flow, the better their APRs are, the more people come and deposit liquidity, the more stable we have base layer pools. It's a self-fulfilling prophecy kind of vibe.
Exactly. It will help attract more liquidity if we can get more volume. So that's the BTC USDC pair. And so you see
sharing. Yeah. Pragmatic Monkey.
Yeah.
Yeah, it came on and then left.
Let me try again. Yeah, now you see my screen?
Yep.
I do, yes.
Okay. So that's a BTC USDC pair. And so, you see currently where there is a 12 bip spread between the bid and the ask. And what you see here, those little orders here and up to this point, those are CCL orders. And then this big bar here, that's the virtualization strategy. And if we look on the other side, quite far away, there is another virtualization strategy. Every block, what this does is if one of those big bar, which is effectively the access to the base layer pool liquidity, crosses the bid or the ask in one side or another, it will just be arbitrage. And that's how, so we'll match the liquidity on the app layer, it will rebalance the base layer pool, and if there is any overlap, it will capture that as arbitrage profit, which we share then between THORChain and Rojira alongside the 2.5 bips trading fee in that case. And what this proposal does is just helping to tighten the spread between those two bars. And the closer we can get them to effectively, the closer we can get them, the more efficiently, the more like every block, small price movements can be arbitrage against other liquidities that exist on the app layer. And when we do that, the other part of that is this create volumes on the base layer, which in turn generate APR. So we have this dynamic liquidity feature where you can build a range, set up a custom spread and a bunch of parameters. And then if you have, I don't have any position here, but that's going to generate an APR on your position. And well, I'll show that in another live stream. But effectively, your APR is coming from trading volumes. Lowering this fee also because it allows more efficient transmission in both direction between base layer and app layer. And so it generates volumes and it generates APR for the LPs. And that's also what can help attract more depositors to use those strategies to build this buffer, make this buffer bigger and bigger, and help keep the price closer to whatever is the center of the book. So that's really what it is about. It's just reducing the distance between those two big bars. And the second order effect of that is more volumes and better APR for LPs and more liquidity, and hopefully we have this flywheel and we can keep growing the app layer. But in the short to medium term, this is gonna be marginal. So yeah,
Oleg, you
I
had a
would not be too
question.
worried.
I'll go ahead and give it to Oleg. Have a question, and if Hans, if you want to jump in after that, go ahead.
Yeah, all good. And I just want to build on exactly this. Let's put aside any of my questions or doubts or technicalities. Let's just look at the potential consequences of building in that direction that you are showing. So my understanding is that the VS, the arbitrage strategy, if we lower the fee to 0, that will basically extend most of the app layer capability to be able to use the base layer of massive liquidity, right, to perform app layer operations. Is that correct?
It's both direction, because every time it's a swap. So what
Right.
it does, it rebalances the base layer pool, and the app layer takes the opposite side of that, and that generates volumes. But effectively, you can really think of it as a buffer that goes to the base layer pool, and the fee is like a friction. And with 0 fee, you will get less friction, and the liquidity can go back and forth faster.
Exactly. And here comes my point. On a $10,000 USDC to USDT swap, you lose about $4 to you pay liquidity fees to THORChain. Right now, if I were to do a $10,000 ETH USDC to ETH USDT trade on THORChain, I would pay roughly $4.30 in liquidity fee to THORChain. Out of the quote, $4.50 would be just lost to slippage, the imbalance created by the size of my swap and the depth of the pool. I would also pay a 25 cents outbound fee. This 25 outbound fee, there's no profit there. So essentially, THORChain made $4.30. There is an imbalance of $4.50 that was created in the pools. If I use the Rujira order book, the taker fee and the maker fee combined, I think, is 20 bips. Like both sides, or 17 and a half?
It depends. No, it's 15 bips taker.
15.
Maker, it depends if it's an AMM strategy, it's 2.5 bips. If it's a user putting a limit order, it's 7.5 bips.
All right. So with that, and there's no slippage, right? If I execute against the order book?
No.
I don't incur slippage.
Well, you have, it depends on the size of your swap, your market order, compared to the liquidity in the book. So you will have the equivalent of slippage pool.
But still, so why would I then send my swaps to the base layer if I can probably get less fees and get better execution on the app layer? And how does that benefit THORChain if they only get 50% of the fees paid to the app layer?
Well,
and with this arbitrage opportunity and reducing the friction, the app layer has very much deeper capability because it can tap and rebalance with the base layer pools. So as SwapKit, as an integrator, I'm looking at this and I'm doing the math and I'm like, well, I would probably get better quotes and better user execution if I just take all of the volume that we currently send to THORChain base layer and just move it to the app layer. Very good for the Rujira people, very good for the users. They would get better execution. But how is that good for THORChain?
No, but you could never do the volumes you do on SwapKit on Rujira directly. First, any swap you will be doing that will be consuming. So the only way you can get a better quote is if you don't consume any of the liquidity of the base layer. Because from the moment you consume liquidity from the base layer, you still have this. So you are saying it's not a fee, but the slippage is still there. So you will have this slip fee that we calculate, and you will get this price impact will be factored into your into the quote, into how much the virtualization strategy can give. So you will always get a worse price. Just if you imagine a scenario where it's just Rujira order book and nothing else than the virtualization strategy, the quote you will get on the order book on Rujira will always be worse than what you would get directly on the base layer. And on top of that, you will have to add the fee, the taker fee, the 15 bips taker fee. And by the way, you could increase it to 20 bips, and then 50-50, you still are at 10 bips, and it's the same as THORChain. I don't think there is any issue with that. But even if you because it's because now you are thinking of two leg swaps. But so we could, so even if we do that, you will never. So you will always get a worse price on THORChain. You will have no reason to come and do that on Ruggira because you will still have to pay the effect. You will have to pay for the price impact effectively. That's what you have to pay because we will calculate the slip fee and we will price based on that because that's what we will get from the pool. Even if there is no minimum floor fee, we will still have to pay something to get. We will get less. The more we take, the less we get. So we have to factor that.
I think the overarching here thing is that this is a symbiotic relationship. Like we're not looking to try and extract from base layer. This, we only exist because of base layer, and like that is the long and short of it. So we set this value to 0, and you come to us and say, hey, look, if I run this through this specific size quote at this specific time, and this is my what I expect to get back if I route it through app layer versus base layer, then we figure out why that's happening and we shut it down because that's not the way that this ecosystem should work, right? And if somebody comes in and they want to day trade and they want to do margin trading and spot margin and perps and borrowing, all that kind of stuff, and they can come and do it with their native assets on app layer, and then they can withdraw their profits or leave their losses or whatever they want to do, right? and that's what app layer is designed to do, is to kind of encourage that kind of activity. There is absolutely no part of it. This should not be in any way cannibalizing those layer 1 swaps. It should be entirely complementary and support it. And it should be like an open discussion. Like if like I say, if we change this value, and you come to us and say, hey, look, actually I think there's a you can bypass XYZ here, then we change the fees. And actually changing a taker fee on app layer suits everyone, right? And it's not. This is like we're doing this together, right? It's not adversarial.
So
I did have
go ahead, Chad.
I did have a very direct conversation with Hans, and he'll back me on this.
Very direct.
Like, it was very direct. A friendly but direct. That like obviously my interest is the base layer. Like, that for me is number one. An app layer is for me as a co-founder, somebody who's running the tech side of everything. The app layer is there to support the base layer and add additional functionality we don't want to do in the base layer, like derivatives or futures or whatever, for example, or loans. And it also is to provide liquidity and do all sorts of things for the base layer to improve things and add more liquidity, get more efficient, whatever. And if I feel like that the app layer is like, sucking funds or reducing our fees we're collecting on the base layer or something like this, then like I was very clear, very explicit with Hans that I will push for the nodes to, revert this change and have have them vote against the app layer and put it back to 10 bips or whatever. Because obviously, like my intent is the base layer, right? And if I get the feeling that's not helping and they're hurting, like if I'm net negative rather than net positive, then to me I'm pushing the nodes or advocating for the nodes to put it back to 10 bips or whatever.
Yeah, that's it. And so kind of we go into this, and as you say, it's kind of it's a chaotic system in the most literal sense of the word, and there's a lot of moving parts, a lot of unknown unknowns, and we'll go into it. And it's not necessarily about, I think, making sure that you have tried to predict every single potential outcome in advance and make sure that this is the exact plan. Was it no plan survives contact with the enemy. It's about intent, and if we find we have a kind of a broad holistic goal of what this should achieve, and what we're trying to achieve as a unified ecosystem. And knowing that if we find that there is an anomaly or something that doesn't align with that long-term view, then we sort of, we come together and we figure out what the solution to that is, rather than kind of, because you can't like, predict every outcome and mitigate all the unknown unknowns in advance. All you can do is sort of be aligned and move forward in the same direction.
And I'm curious, like, so what if we do? So let's say we do this, and Oleg's keeping an eye on this. And after a couple months,
Great.
He's like, I'm right, guys. I told you so. And he comes back to us with data and everything. And then you look at it, because this is a holistic approach. This isn't, the intention here is to benefit everyone. You look at him like, oh man, yeah, Oleg, you're right. But maybe that leads you to like, this is where I got mixed. This is what I got wrong. This is what I need to fix. We can change it and fix it to get your desired outcome. So this is to back to Chad's point of let's just try it. We can argue the what ifs all day long until we actually just do it, get some live data, then you can iterate, right? This doesn't have to be
Exactly.
this doesn't have to be the final design. Maybe this leads you to your final design, right?
Yeah, it's like ChaosNet days, right? We ChaosNet was like, okay, here we go. Let's see what happens, right? And we've been figuring it out ever since. So I think that aligns with the spirit of THORChain for sure.
Right. Like I said before, like Oleg's a very smart guy. I have a lot of respect for Oleg. You know, and where he's coming from, he could be completely right where he's coming from. I'm not even saying he's wrong. Same thing for Boone and other people that are like, you know, against us for reasons. They could totally be correct. I'm not saying they're wrong. I'm just saying I don't know if they're right or wrong. I don't really care in some ways if I'm right or if I'm wrong on this topic. I just want to know what the answer is. Am I right or am I wrong? And like just trying is the only way we can actually figure that out. And if we're wrong, we can either make an adjustment to make it right or turn off the entire thing entirely, like to just depend upon the conditions and the data we have to find out, you know, if there's something we're missing, something we got to add, something we got to edit, or the whole thing is just a bad idea to begin with and we should just like turn the thing off.
It was Brian Armstrong recently, wasn't it, that said that, you know, if you don't have an answer and you need some signal, then just do something, poke it.
Well, like, are you concerned if, let's say you are right, your concerns are valid, and these things happen? Is it irreversible? Like, if we reset things to current conditions, can we just pick up where we left off and we just we're out a few months of revenue? Or are you worried this could be an irreversible change?
No, I think it's very unlikely that it's irreversible. The only thing that I think could theoretically be irreversible is if, for whatever reason, this pushes all the arbitrageurs out. I don't think that's going to happen, but I think that could cause longer term damage. In any case, I've been wrong many times before. THORChain has surprised me quite a few times. And I think the last 2 minutes really define where my skepticism and my pushback comes from. I like THORChain as a mature and stable and always working protocol, not as a way to find answers to things that we imagine. That's just a different perspective and it's mine. But yeah, I just like THORChain, very silent and perfectly working.
Yeah, I mean, in theory, I would agree with you, but we're also in like a live market where we have competition and we're trying to innovate. We're trying to like become more efficient as a protocol and get more swaps, get more volume. And we're thinking of creative ideas to achieve that, you know, like rev share, for example, and, you know, this and dynamic fees. All these things are new ideas that like, not like, I don't think any other AMM has done any of these ideas, right? To my knowledge, at least. And so, and some of them may work and some of them may not work. None of them are very risky, in my opinion. Like, you know, the downside risk is pretty small and you can always just flip it off and carry on like it was before. So there's very little like downside risk from my perspective, my opinion. And there's very high, you know, upside potentially for all these features that we've been talking about recently, you know, and some will be more successful than others. And that's, you know, inevitable. But I think it's worth trying so that we all just learn as a community about what works and what doesn't. And then we can also learn why it doesn't work or why it does work. And that might give us more information to iterate more and become even more efficient and offer better pricing, faster trades, et cetera, et cetera.
Well, thanks for having me on. I have to hop off and I'll just join the listening room again.
Well, like quickly, there's another pressing debate going on right now. Your ethnicity. French Canadian, Russian, Alaskan house cat. Can you mind sharing with us?
Yeah, I think the accent gives it away, but I'm French Canadian. The nickname Oleg Petrov comes from the Montreal Canadiens hockey player that used to play back in the day. And when I was younger, I preferred vodka over beer. So my friends just started calling me Oleg, the Russian guy, but I'm not Russian, doesn't speak it. French native. That's where it comes from.
Excellent. Solving all kinds of problems today. That's awesome. Thank you.
I'm standing by my Alaskan house cat theory.
Yeah, I'm down, man.
All right. Thanks, guys.
Thanks, Oleg.
Thank you.
Thank you.
Thanks for coming, man. Awesome.
This is great, guys. Really glad he came. Glad you guys are here. Did you want to have some more thoughts? You want to get out there, pragmatic or hands?
I've only got to the hour, so 7 minutes, if that's all right, guys. I mean, it's lovely to be on, but got to cut it.
Yeah, and thank you for joining. And I want to make this a recurring thing because I try really hard to maintain, like community, like communication. That's why we do Thursday. If there's ever tension, ever about any issue, we can do this whenever. I want to make sure because talking is so much more efficient than text. Text, you can't tell, intonation, the emotional context. It's just worse, right? The bandwidth of exchanging ideas is so slow. All of us get on here, we just talk through a thing, and I think we all came to a pretty reasonable conclusion. Let's just try it out and see what happens, and if worst case, we'll just flip the fucking thing off, right? So thank you so much, Hans, for joining. I really appreciate it, man. It's just exactly what we needed to do.
Thank you. It's been a joy and a pleasure.
Thanks.
Pleasure, brother.
See you guys later.
Right.
Cheers.
Pragmatic Monkey, did you have something follow up you want to say on the?
No, well, just I
conversation?
think that's the reframing Hans made is really the key. Like we are in it together. Like that's the approach when we're discussing ADR 20 and other things. Like it was two possible approach. You could have a permissionless app layer where it's chaos, and I mean it's just like any other generalist EVM chains, and there is no concrete plans and no working hand in hand. But here, like we are not here to steal THORChain pie. Like we are literally, we live on THORChain. Like we cannot exist without THORChain. Like from the moment we lose our sovereignty and we pay tax to THORChain 50%, which is a lot. Like we are really part of the same family, and we are happy with that. We are here to make it grow together. What our goal, like right now, it feels like we are. We may lose revenue from arbitrage or whatever. Like the end goal is to really drive more volumes, more activity, and with all the stuff we are building, all those products, drive a new wave of users to THORChain, which under the hood will also consume in the form of secure assets, THORChain liquidity and generate activity, but also generate activity from a lot of other different things, and including like more advanced automated trading strategies. That's quite cool. Like you can put your native asset that works then to secured by THORChain and do all those fancy stuff you cannot do in any other place, and you will be able to do that with Monero, with TAO once it's integrated with native Bitcoin. Like it's very cool. It's very unique. That's really what should drive a lot of more new users and volumes eventually, and that's it. And as Hans was saying, like if we have to experiment because those systems are way too complex, and the action you make, like I hear the argument like, yeah, we want number, we want backing, like we try to put a few number, but it's all like fugazi. Like at the end, you can change a tiny assumption in your model and everything's changed like drastically, and your own actions directly impact the environment. So you cannot model that correctly. It's impossible. Like this is the type of stuff you have to experiment with. And here, like the experiment is just.
And I'm actually glad because if you came to me with a model and said you did model it out and you know this is going to happen, then I know you're full of it, because it's impossible to model this. It's just too many variables.
Yeah, no, of course, no, it's impossible. Like, yeah, it's just too much. Like the complex systems, like it's like wanted to model how the grain of sands in the desert are put together. Like,
it's not even you can model it internally. You have to model it with like the macroeconomic.
Exactly. And what the central bank of China is doing, and how this is going to impact the yen versus the dollar, and this guy will rebalance his position, and suddenly and THORChain gets a tiny fraction. Like I'm exaggerating, but yeah, that's pretty much it. Like but especially when you touch to the microstructure, like I mean, Oleg is right. If we scale, this likely will have an impact on existing arbitrage, but we don't know if it will be better or worse. What we know is if it has an impact first, we can reverse. Like it's just one vote away, and we can put back the same fee, 10 bips or whatever. I hope we can do lower because it's just wasted opportunity otherwise. But we can reverse it, and if you reverse it, the state will be the same. His fear was that arbitrager will leave. By definition, arbitrage means that there is a risk-free profit to be made. If some arbitrager leaves, some other will come necessarily. Like especially like you still have almost 100 million of liquidity on THORChain. There is money to be made. There are many smart people. There are people who leave, who knows the system, who can come back. Like or the one who if some leaves, some of the existing one will become bigger. Like it's not gonna disappear and suddenly there is no arbitrager and the price stayed delocated. This will never happen in an open financial market. So but I'm not worried about that.
If I understand this right, isn't it possible that if this actually works really well, that as liquidity on app layer grows, we do start replacing these arbitrage bots, these arb players, in exchange for a decentralized arb liquidity. Basically, all the users putting their money into the onto app layer become the arbitrage, basically.
Yeah,
And now we're not
exactly.
relying on any single entity and how well capitalized they are.
Mm.
We're now relying on how well capitalized our thousands of users are. And that in itself should become more stable, because our arbitrage, like Chad, you've kind of complained about the arbs not doing rapid swaps well. I've been thinking, what if the arbs that we have, what if a lot of these arb players are just undercapitalized right now? They don't have the capital to arb that we'd like to see them. And it's just a function of the bear market that everyone's suffering. So could the app layer become way better capitalized and become a way more efficient?
Yes and no, because if you have a mechanism for people to contribute, like anybody in the community can, I think, can contribute capital into the system. Monkey, keep me honest here. So that you can generate a huge amount of money or capital to be able to do what it's doing, right, which is obviously beneficial, and importantly, when arbs, they keep 100% of their profit. They're in that sense, but in this system they're keeping half of the profit instead, right, and half of it's going back into the protocol. So it's like it's more aligned rather than like they're doing things for themselves and they make money and whatever. But this system is more like more aligned to the protocol in the sense of like, I'm going to give you back half what I make, and put it back into the system rather than extracting it entirely.
I've got a question. Since we're here, we're talking about this pragmatic monkey. If you could quickly just is this available for anyone to contribute liquidity right now? Is the system ready to go to try it out? Maybe someone's listening to this saying, hey, I want to try this app layer arbitrage thing. Like, how do I do that? Maybe I'll take it to you from there.
So first, let me reframe something. It's not, you don't directly arbitrage when you deposit liquidity. You become the counterparty of the arbitrage. So the way you make money is on volatility. You have a price dislocation between the base layer pool, the app layer pool. You are the app layer pool, and you set your own range, and all that you can do already. You set your own range, your own spread, and your spread will define how much profit you will make, and you can even set how much of that you want to yield versus to compound.
Just people know.
So sorry.
So this is concentrated liquidity, what you're talking about.
Yeah,
right?
No, exactly. And so with this concentrated liquidity, you become a counterparty to the arbitrage whenever there is this imbalance between THORChain pool price and the app layer price. And the virtualization strategy is the part that does the arbitrage automatically. So if you want just the arbitrage profits or share of the arbitrage profit without doing anything, you will be able to get that by either buying and stacking RUGI or by buying a rune and bonding rune, because a share of the gross system income will become a share of those arbitrage profits. But you're also asking, like, if eventually we can totally replace external arbitrageurs. That's not possible. Like, again, like the app layer is living inside THORChain, but there's a finite, like when you provide liquidity, it has a finite quantity among all those liquidity provider of BTC, let's say, and USDC. If price, as long as, so where we all make money, whether it is a liquidity provider, THORChain or Ruggira, is when price moves inside this range, because then if you have a dislocation that is big enough, somebody like your LP, your liquidity provider, will capture the spread he has set, and Ruggira and THORChain will capture a trading fee plus whatever arbitrage profits from the moment the price moved. But if there is a big price movement in one direction or another, at some point you exhaust all the liquidity of this buffer that is the app layer, and you always need external arbitrager to come and take the other side and rebalance. So they will never be gone entirely. It's just like, the bigger we can build the buffer, the more fee we can generate internally, first of all, from all this economic activity. And even like, and that's really, I think, the upside for THORChain is not so much the base layer. This virtualization strategy gives the base layer a certain flow and certain volumes, which means that we can kickstart the activity, the yield for liquidity provider. But eventually, once we also add DCL, which reprice every block with oracles, you start to have like a third source you can arbitrage against. So it will be base layer pool via the virtualization strategy, CCL position, or DCL position, which use the oracle to reprice. And then as long as price moves, every time we as a system, THORChain plus Rojira, capture a little profit from the volatility. And that's really what we are building, a machine to make money on volatility. At least that's how I see it, but that's pretty much how all financial market works. And when we do that, we also, like with CCL, I think with DCL even more, we provide very interesting tool for people, for users to come and to put their capital at work, to trade 24/7 in a very easy way, in a permissionless way, and generate a yield on a pair of assets in which they have conviction and are happy to hold any of the two assets in this pair, like BTC and USDC. And that's how then suddenly we have like a much nicer offering, and you add that to a distribution channel. Now there is station launching, and people will be able to do that with agents directly. So you can also attract a new crowd of people that will use agents to try to make money by using whatever strategies are available. And Rojira will provide like very good foundation for those agents to put capital at work and generate some yield. And suddenly we can grow this pie. We can attract new users. They deposit liquidity. It helps the base layer pool because suddenly the buffer is bigger to rebalance whenever there is a big swap coming in. But also internally, it generates activity even without touching the base layer. And that's in itself generate fees that we share together with THORChain. So it's really like we are part of the same family. That's the vision we decided to pursue. We are not here to try to screw anyone or eat the lunch. We are here to grow the pie together. And if anyone spots something that we do, one of those experiments, one of those lunch, and they, oh, actually this has changed this and that, and now it's not working as it should, or there is a loop, and you can actually go around the app layer, the base layer fee. Well, we will fix that. That's obvious. Like it's really like the goal is to grow this pie, to attract all those users, to become like a sovereign digital nation living on a blockchain that offer equal chance opportunity to anyone who want to put their asset at work and to participate in the decentralized financial ecosystem. It's not to just try to zero-sum game to steal funds from THORChain and not grow this liquidity. The key stuff here is growing liquidity.
Pragmatic, maybe like maybe at some point we just, Ruji and THORChain does have to merge, and then just eliminate that whole question, right?
So
And,
yeah,
just become
so
one.
I always I'm sensitive to this topic because like people go crazy about that, and whatever I say, I'm sure it will be used against me, and people are gonna fabulating. But yeah, from a like ignoring like the hard thing is in a merger is to find terms that works for everyone. But I'm sure there could be clever mechanism, and that's definitely not on the table for now. But it's a reality that having two different tokens that competes creates naturally misalignment of interest. And that's true that if everything was merged and we're all really under the same banner with not 50-50 revenue share, but 100% revenue share, it will probably make a lot of conversation easier. I mean, especially for us, like we feel like from the reaction we get, whatever we do, we really come here like from a good place. Like we have been in the trench now, like for almost 2 years trying to build this system on THORChain, or 1.5 year. We get excited. We finally get to a place where we learn stuff, and we feel like, oh, all we get is smash in the face. Oh, this is shit. You are trying to steal us. Oh, this alpha beep here. Like, come on, like this is not what we are. We are trying to grow the pie together to build like this new. Better financial ecosystem for the world, and we have amazing rails with THORChain, and let's do that and not argue. But we get meet with a lot of hostility, and I think a big part of that indeed is that some people are don't see the two as a symbiotic relationship, and yes, the economic part of having two tokens doesn't help with that.
Let me add some context there, because this is I want, like, especially I'm speaking to the app layer. If you're only exposed to the app layer, I'm speaking directly to you. This is just how THORChain roles. And the conversations we had now are nowhere near as intense as we had in 2021, 2022. I remember spaces where we had devs, I won't say names, but they were saying, one was like, you need to get the F out of DeFi. You are an idiot. You know, like we were like, it was war, you guys, like back in the day. So this is very mild. This is how THORChain rules. It's a ruthless meritocracy. If you guys feel at all that THORChain, you know, is coming in, we're just making sure the first principles are there. Now, some people are not good at articulating themselves. Half this community is on the spectrum. Let's be real, you guys. So, you know, our language skills are not the best, okay? But just try to remember that, yes, we all share the goal that we're trying to build this infrastructure and not at the expense of layer one. Because to your point, Hans and Pragmatic Monkey, right? THORChain is the base of everything. If THORChain dies, the app layer is gone, right? This is obviously the case. So I totally get and I totally believe that you guys want to make a homogeneous, holistic system that works for everyone. I wanted to expand on something though, because I really like. I am a believer, you guys. I am a believer of Kenton's prophecy of the thirds, right? The prophecy of the thirds.
Prophecy of the threeth.
The threeth. I'm sorry, my language skills
What's
is bad.
the prophecy
I'm
of
on
the
spectrum.
truth?
So
Third market cap.
I have ever since I got into THORChain, my thesis was that THORChain could become the third largest crypto by market cap.
Oh,
Because Binance market cap was number 3. Bitcoin, Ethereum, Binance. And I think THORChain is going to be bigger than Binance one day. I really do. This is what I'm working towards. I hope you guys are, because if not, tell me, then I'll leave.
absolutely. I mean, that's exactly what I meant. That's the goal that we should become, and that's actually I like
this
this
is our goal, right?
3.
We're not here. We're not here to be average. We're not here to be mediocre. We're going for the biggest, the best, number one. And when we get there, it is conceivable we could be the third largest crypto by market cap. And I laid this all out. I tweet about it, and I wrote an article about it. And then there's a famous THORChain troll. Maybe I'll name him. I won't name him, but you talk about people on the spectrum, Denny. This guy, I don't know. He's
Was it Denny?
No, it's not. If you look up my article, I quote him in my article. But anyway, he starts trolling me. He's like, "There's no way THORChain will be the 3th largest market cap." 3th, and he keeps writing 3th. There's no way it'll be the 3th, and I keep replying to him, the 3th, hey, and like I'm teasing him because yes, the 3th. There's no way it'll be the 3th, and he keeps insisting on using 3th. So obviously English isn't his first language, right? And so he's coming at me for being retarded, and I just keep stoking him for spelling it wrong, and we're going back and forth. So I'm like, all right, it's the 3th. THORChain's going to be the 3th largest market cap in crypto. And then I tried to meme it. I tried to like getting it out there, and some people, they jumped on the bandwagon with me to try and meme this.
It's just like HODL. Like HODL was like a
exactly
misspelling on a Reddit post in like 2010 or something, and it just like stuck. You know?
That's this is our version of the HODL. It's exactly it.
Okay,
so
the truth.
So then I went with it. I'm like, the prophecy of the 3th, that THORChain will become the 3rd largest market cap in crypto. And
I like this prophecy, and let's work toward that. That's really the goal.
Yeah.
Well, we need Rogier's market cap.
How many Bitcoin do we need to sacrifice for the 3th? We sacrifice this Bitcoin in the name of the 3th.
We all need special hats. Well, this is what I was talking about, Kenton, because I believe in the prophecy of the 3th. I am 100% committed to what I'm here to do. And my idea is, with this app layer arbitrage design, I do envision a day where the liquidity is so deep on THORChain. It is the hub of financial infrastructure that Binance arbitrages against us, against their own internal book.
Yes,
right?
We become the price setter, right? And Chad, I know you talked about this. It is very conceivable THORChain sets the price for Bitcoin one day. It is set on THORChain. You know, when we get that big. Well, it is. If you're the biggest exchange, you are your benchmark. Everyone's arbing to you, right?
Yeah,
we are the price setter for Ruji already. It's the biggest exchange for Ruji THORChain, so that's already happening. But I think it can happen for XMR as well. Like,
do you think actually we set the price for Rune, or does Binance push us around? I'm worried about that.
There's more volume. Like, it's one of the, if you go back to the original white papers of THORChain from a long time ago, And there's like economic assumptions, and one of the economic assumptions was that THORChain is the center of its own, its own token, right? And that there's not greater volumes on Binance versus THORChain itself, because if you do, it introduces some potential security related, economic related issues. We still had, I think, the majority of the Rune volume being traded today is by a good margin on THORChain rather than Binance.
Love
The
it.
funny thing is, like, to be honest, like from a first principles perspective, right? THORChain should easily and handily beat Binance, right? And the reason why I say that is because it's not KYC, meaning you don't have to like sign up and like give your identification and then like take a picture of your passport and like send that in and then go through that process. And then when you want to make a trade, you got to like deposit some Bitcoin and then like wait a few blocks, which is like 30 minutes. And then you get in there and then you like click a few clicks and then, oh, you have to log in first. You have to log in, then it sends you an email. Click the email so you can actually log in. You finally get in, then you do the trading and make a few clicks, whatever, then maybe like 20 or 30 clicks of your mouse in order to do that actual activity. And then you got to withdraw. So then you withdraw, but then you get another email, go back to your email, accept the withdrawal. Okay, then you have to wait another hour for the withdrawal to actually come out. Like, by the way, and you're like paying like 5 times the price, right, than what THORChain can achieve, because they have a massive corporation with thousands of employees that all need to be paid. And so they're structurally more expensive because of that, right? And so, like, from a first principles perspective, we should be easily handily be able to beat a Binance or a Coinbase. And then probably the biggest reason, in my opinion, why that's not the case is because of they are corporate institutions, they are centralized, larger institutions where most of the capital wants to work with centralized entities over decentralized entities for legal reasons or for regulatory reasons, primarily more than anything else. And more regulatory clarity that comes, that kind of gets chipped away naturally, which, by the way, the Clarity Act is coming out hopefully soon if everything goes smoothly or whatever. And that just requires time because government moves slow as absolute fuck, because we all know that. So it's just like, I would say, like, honestly, like that we are positioned, or even just DEXs in general, are positioned to be able to outperform sexes in like many, many, many ways. And it just requires the rest of the world to like figure that out in order for that to actually like be realized,
I love it. And so to be clear, everybody, first principles, if you're doing this, as Chad says, your first principles are broken and THORChain's coming for your lunch. That's just the way it is. If you're doing all the email stuff, it's over. It's done. So
yeah, I mean, if you go to your wallet, like would it be Trust Wallet or Ledger or whatever the wallet you have, and you just like, oh, I got Bitcoin and I want Ether or whatever, and just like click, done.
Yep.
And it's like, and it's done. Like, and it's
done.
Executed at a better price and faster, and it's easier and less like, complexity. Like, where's the fucking downside here? Somebody explain that to me.
Explain it. Tell us
Can
what
you
we're
guys
wrong.
see my screen? I'm sharing the screen.
What do you got for us, buddy? Yep,
this is a sneak peek of the new website. So we're the largest Bitcoin exchange in the world. We'll be, and Monero and BitTensor. And then we're going to become the largest decentralized exchange at one point, and then at some point the largest crypto exchange. So this is what I'm pitching for us.
That's nice. I like it.
And then I compare, people compare Bitcoin to gold, or we're comparing THORChain to Binance. That THORChain can become worth more. So
I love it. I feel like the stars are aligned. I think we got this, you guys. Just got to keep going. No assumptions, just hard work.
We needed to create some like animated shorts on YouTube around the Threeth, like the prophecy of the Threeth.
Yeah.
This is so memeable.
Dude, the community, some of you guys are listening. They were jumping on the bandwagon. We're having a lot of fun with it. There was Thirth and Threeth. We're coming up with all kinds of different things. But 100%, yeah, I would love to get that meme going. Cedric
from the app layer, you are the biggest troll I've ever known. This is your job, buddy. Get on it.
Cedric is amazing. He's the best troll out there. He's a smart troll.
He is a smart troll. Yeah, absolutely. Well, okay, we have talked about the app layer and stuff like this. I want to make sure, because this is Thursday and the app layer is all the same stuff. Chad, is there anything I want to make sure, if there's any, I don't really have any questions to the community. I think we handled them all. Is there anything you wanted to talk about pressing on the THORChain side or the app layer side? I don't care. And Pragmatic Monkey, I'll kick it to you afterward as well.
Yeah, I mean, I have a bunch of things which I don't have to take too much time or whatever. Zcash, I think, will be progressing after the next churn, which is like in a day or two. we'll be releasing a change that basically enables Bifrost to start doing the Zcash stuff. And then the next churn after that is when the network should generate new addresses on the Zcash blockchain. And then the treasury will be, putting some amount of money. I don't know if it's going to be like the full amount of 100K or something smaller. That's TBD. But it'll seed the pool and kind of get that rolling. So Zcash should be coming out, should be launched and taking real volume in a week or so, I'd say, hopefully. We had some delays on that because of some churn issues, but we're finally getting around to that. Monero's on chainnet now. It's being tested, validated. We're looking for bugs, issues, problems, and we're kind of continuing on that thing. TAO is also being worked on. The dynamic fee model is currently being voted on. So if you're a node operator or somebody's a node operator, we got about 30% ADR votes. We're looking for that 2/3 majority. I'll probably put out a notification to the community to remind them to get that done, because we're ready to go to start testing this with the select affiliates. We just need the community support to start that process. The limit swap TTL is probably going to be changed very soon to be like a 6 months or a year. I know a bunch of people in the community wanted, I think right now it's 3 days, which is way too short for a lot of people. So that should be expanding and making it more usable as a product. It's another thing that's happening. And then I had something else in mind. I can't remember what it was though. V6, so should we continue to roll out? Solana's been having some issues.
The router V6.
Yeah, router V6 is I think Sly's taking that on to get the rest of the chains slowly over time, just carefully rolling that out. Solana rollout has been paused for a while because of some issues with VoltSig that we're working with the developers to get that fixed. There's some problem with the Solana memo, blah blah blah, or something like this. So we're trying to get that kind of figured out.
That's an issue with Solana tokens you're holding on VoltSig. That has nothing to do with Solana on THORChain.
Correct.
This is a hang up for you to add liquidity to THORChain.
Correct. There's some bug within the VoltSig, wallet app that's causing some problems. Something about the memo. I don't even know the details personally, but there's the developers are trying to figure out what the
Come on, Felix. Get on it, Felix.
Whoever the developers are, they're working on it. Memoless for ERC20 is something we're continuing to work on. Hopefully that'll be done for 3.19, by the way. I know it's something, Kenton, that's something you're probably interested in playing with when that goes live. And I think trying to think if there's anything more on my sheet here. Rev share will probably be in 3.19. We're going to do an ADR discussion and vote on that probably after 26 passes. Which will be ADR 27 or 28, I think maybe it is, whatever that'll be. That I'm super excited for. That should hopefully create a lot more volume, a lot more fees collection for the protocol. I think that's more or less it. Although I'll tell you one funny story. Just I was on this real quick. I was on TikTok this morning, just kind of doom scrolling or whatever, and I came across some live stream that was talking about crypto, right? And people, he's just talking about the markets and whatever. People are asking him questions. So I asked to go up, and I'm like, "Hey, THORChain co-founder, here, I'll come up and we'll have a conversation." Just to I don't know, reach out to a larger audience, and as an attempt to just get people talking or thinking about THORChain and his community, whatever that was. And he's like, "No, you're not." And so he wouldn't let me up. He wouldn't, because he didn't think I was being truthful. He thought I was just bullshitting or whatever. He didn't think I was actually the co-founder of THORChain. And so I had to switch to my X, my Twitter or whatever. I had to DM him or send him a message "Hey man, I'm actually real." Yeah, and then he just followed me back an hour ago.
I was on Twitter yesterday, just scrolling around. I saw a video clip of people getting phone calls from Michael Jackson. "Hey, it's Michael."
Oh, really?
And they're like, "Who?" "Michael Jackson." "Yeah, whatever." They're just hanging up. And so there's all these people hanging up, but it's really Michael Jackson. And they're all hanging up on him because they're like, "Michael Jackson." And he calls back.
Why would Michael Jackson be calling me right now?
Yeah, exactly. And so I guess people just hang up on him like 3 or 4 times in a row. It's like,
Dude, I would do
quit
that. If I was
prank
Michael
calling me.
Jackson, I'd be calling random numbers and just like, that would be so fun. Just go to like Omegle or whatever the hell that website is. Hey guys, Michael Jackson here. That would be
But,
so much fun.
Chad, there's 2 other things. There's some lingering votes that is it XUSD? And
Oh, yes.
and then there's the Tor anchor pools. And
Yeah.
seems like nobody cares. No one's like doing anything, but they seem pretty like kind of straightforward. Like we should just do them. Like, is there any reason not to do them?
Yeah, there's not really a strong, at least from my perspective, there's not a strong reason not to do them, at least not that I can think of, nor does anybody conveyed an objection to these things. I think it's just like, there's always a problem in it, in any decentralized system, like a DAO or whatever, of like voter turnout, right? Like if you look at any DAO in Ethereum land, voting is like, it's high if it's 12%. Like if you're at 12%, you're like extremely doing well. And it's a question about like how we want to handle this within the community. Like we've had conversations recently, internal within the team of actually like having some sort of either like a carrot or a stick for people to vote, on these ADRs or these, things we want people to vote on, to get the turnout to be faster or more consistent or whatever. And we have like right now, there's a bunch more like ADRs to vote on. Like like there's even just like the reserve max cap, right? Which is one thing you've been talking about for a while, Kenton. Like that's still kind of waiting, and there's like more. I think there's more coming too. And so like we're kind of being throttled as a development team in terms of our ability to get these things out the door and like functional and get the benefit of all this work we put in to make these things work. And whether that be like adding Monero, whether that be ADR 26, ADR 27, ADR 28, the guy USK or whatever that one was, the THORs, the this, the that. It's just it's a lot, to be fair, and maybe there's something we need to change to make it easier for nodes to vote or something, or maybe the nodes don't vote and we change it so the bond providers are the ones that actually vote. Maybe we get worse turnout in that scenario versus better turnout.
No offense to my BPs, but I think it's got to go through the node operator.
Yeah, that's fair.
But I think there should be a stick. And I've been saying this for a while. There should be a penalty. So like, it's either you have to vote. You have to say like you don't actually have to make a decision, but at least there should be an option to say I'm aware of the vote, right? I'm thinking about it. So either you vote or you signal you're aware, and that way we know this node is alive, it's active, it is participating, and fine. You need time to think, do your thing, no problem. But because that's my concern, like. I think we have genuinely good voter turnout because people are engaged. People care about THORChain. They want it to succeed. But as we grow and get bigger and more decentralized, governance is going to be a nightmare. Imagine doing this. Everyone wants hundreds of nodes. It is going to be really hard to wrangle everyone. So there's got to be some consequence if you're not participating in governance because you hold back the rest of the protocol. So I'm worried that people are just on holidays and just not even paying attention. Like how many times have we seen a node basically go down? It's like just screwing things up for weeks because the guy's just literally not paying attention.
Yeah.
And so
yep, we've seen that.
They need to be penalized for not paying attention. So
yeah. One of the sticks we talked about internally, and there's a bunch of different ways we could go at it, but you could give slash points in some scenarios. We could do like a churn. We select somebody that hasn't voted, like whoever has made the least amount of votes, right? It's like you get selected to be churned out, or when you get churned back in, you have to make your votes before you churn in, right? So if you get churned out because you didn't vote, you're not going to be able to churn back in until you do vote. And so it kind of forces you to vote at that time, right? There's probably 50 different ways we could kind of like, like we could do it. The way that I was thinking about if you want to go stick methodology is that, or you could do like a cutting of their rewards, because it didn't vote, you get 10% less or some number or something. Part of the problem though is that you have to establish within the protocol of like which things are like required voting, right? Which memirs, or maybe like anything with an ADR in the memir, like by default is required voting or whatever. right? But we don't want required voting for like, should we halt, Doge
Right.
trading, for example? Like
Yeah.
you don't want everybody voting on this. We just want a few people to vote, which is usually like either the team or nodes or like whatever the hell it is, to just vote, 3 or 4 nodes to vote to halt trading and then fix the problem. And then those 4 nodes, go back and resume the trading. So you have to figure out a way to like define which ones, and maybe you could do this by like, if it hits 1/3 plus 1 or greater, then it becomes required voting, right? Like if enough people voted on this thing, like a 1/3 of it, now it becomes required and everybody has to vote, or whatever, right? And if you don't vote, then you run the risk of being churned out in the next churn, and you won't be able to churn back in until you cast your vote to get back in. Maybe that's the way to do it. Like
Yeah.
like I said, there's like 50 different ways we could kind of cut this, and I'm not sure any one idea is necessarily a lot better than the other, but something rational, reasonable, could make sense.
I like your churn out idea a lot, because if you're not making money, that is the greatest, incentive right there. You're out of the network because you did not vote. You're not making money. Your BPs are not
Yeah.
going to be making money, right? So that's
Yeah.
pressure from the BPs as well.
Yeah.
I
Yeah,
think that is a healthy. I think it's very
Yeah.
healthy.
In the end, like the protocol wants engaged nodes, right? Not just to vote, but also to protect the protocol,
Yeah,
right?
exactly.
If there was
It's not about want, we need.
we want every node operator to be a professional node operator, and the income
Yes.
should be there to make it worth your time, right? In terms of your compensation. And if there's an attack on the protocol, there's some malicious, activity that's going to drain all the funds or something like this, you got to be readily available to do like a make pause, right? As much as you possibly can as a human, right? Like you can't. I don't expect everybody to be like on their keyboard like 24/7, staring at a fucking screen. Like that's obviously ridiculous. But like we want people to be, highly engaged and involved in voting and be aware of what you're voting in, and you don't vote just because I tell you that my opinion is to vote this way, and you do your own research and you come to your own conclusions. You can ask whatever questions you want to ask, and all that kind of stuff, and just have like better quality of voting too, just in that context as well. So if the perspective of the protocol, it's like we want very engaged, operators so that we can vote and we can protect the protocol more effectively and these kind of things, then kicking people out because they're not participating in an active kind of way is somewhat of a rational perspective. At least that will just foster people to be more aware and be more on top of every ADR vote that the that the devs and the community are throwing out there.
Yeah.
I think that's it. I think that nails it. I mean, someone can correct us if we're wrong, if you have another idea, but if you churn a node out for not responding, I think that is a perfect incentive for the reasons we described. So I love that idea. I think that's great. I can't find flaw with that.
Would that maybe, I'm just trying to think that through. Let's say if enough, but then we get so many nodes churning out. Let's say we get 20%
it would
of the
only be
nodes
one.
churn
It would
out.
only be one node churning out per churn. It wouldn't be everybody
Okay.
that has not
Yeah,
voted.
that's important.
That would
Yes.
be too
Yeah, we-
important. And you can
we
make an
don't-
argument that like once we get to a 2/3 majority, even if you didn't vote, like we're not going to kick you at that point because the protocol
of
is able
course.
to achieve what it's able to. Well,
Yeah.
it got to the result it wanted to get, even when you didn't participate. Although if there is another vote that's happening that didn't get to consensus, and it says, oh, you didn't vote on this one, and you didn't vote on this one, and you didn't vote on this one. Okay, you didn't make 3 votes, and therefore you're kind of high up on the list, and somebody who didn't make 1 is lower on the list, and so the third person who didn't vote 3 times is the one person that's going to get kicked out on this particular churn. And because you are consistently not voting rather than you didn't vote 1 time because you were on vacation, or something like this.
You would need a buffer time too for nodes and BPs to discuss and deliberate a topic before you
Yeah,
initiated that behavior, right? Like maybe a
We can do
couple
a
turn
yeah,
cycles.
we can do
Something like
something like that. Yeah, I don't know what it would be, but
That's why I think you got to have at least an option for, I acknowledge the vote, but I haven't
Abstain.
voted yet. Type of,
Abstain,
yeah,
yeah.
abstaining for now, whatever. At least you're signaling that you're aware, right? But yeah, I don't know. The churning out thing, at first I was good, but now I'm thinking, well, maybe it's a bit harsh. And like the last thing we want is all these nodes. The more nodes we have, the better. And is a vote really that crucial to kick several nodes out? Because then we lose that economic security.
wait, it churns 1 out per
Every
churn.
churn. Yeah,
Yeah.
per churn.
And then hopefully that they they're out, so they turn back in because hopefully they would actually cast a vote at that point and say, okay, I support this or don't. Or either that, or the voting had completed on that ADR to hit that 67%, and therefore it's already satisfied. Therefore, the fact that you didn't vote allows you to come back in because it's already been satisfied, or it's already been resolved, from a voting perspective.
What if
So
we
you would
leave
come
them
right back
in so at least we maintain the security, but we just take all their yield away or some portion of the yield? So at least the
Yeah,
node is still there providing security. They're just not getting paid for it anymore.
you could do that, and you just basically would be slashing them every block, more or less, or every
Yeah.
2 blocks to be more precise. Because a slash is, I think it's like 2 blocks of revenue. So you're like cutting into your profits.
And that way,
So
when they
you-
go to, then they're like, oh, shoot. Then they go vote. They're still in. They don't have to wait 3 days to get churned back in. Okay, I got my vote going. The slashes go away. I'm still in the network. Everything's okay. Because we're all human, right? We get busy. We lose track of time, whatever, right? And so, if somebody just slips up and now they have to wait 3 days to fix, like that might be a bit harsh.
Possibly, like I said, there's like a
Yeah.
bunch of different ways you could approach this, and I'm sure every person has a slightly different perspective on it.
Yeah.
And they're all valid. They're all like reasonable ideas or reasonable approaches. And how much different is one versus the other?
Yeah.
Could we make it? Could we make it if there's an ADR vote that it's just so obvious, like, maybe like to Kenton's point, like they just may not have known for whatever reason. Things happen. They're not a bad person. They're not lazy or nothing. Just for whatever reason, slips through the cracks. Is there a way, whenever there's a new ADR proposal on THORChain, becomes an official thing, that there's like some sort of warning or signal or something that just says, hey, pressing need, this must be addressed, like this needs to be addressed? I don't know how that works, because I know everyone has their own build, their own configuration for nodes.
We kind of have that a little bit already. Nine Realms had an API endpoint that would be like active voting. So when you did like make status on your node, it would just like give you like a general printout of like the status of your infrastructure, and if the blocks are behind or not, or like whatever, like how many slashes you have, and just various like kind of overall information. It would actually have a list at the bottom saying like, here's all the things you haven't voted on yet. And then you could say, okay, I got to vote on this one, this one, this one, or whatever those are. And it kind of helped for a while back, like a few years ago. Like it actually did help. We haven't like used it that much in the last like year or two. Maybe we can start using that little mechanism again. I don't know, but
because that would address Kenton's concern. There'd be I'm sorry to interrupt you, Chad. There'd be no excuse that they would not notice if there was some sort of reliable infrastructure that just immediately signals when there's a new vote. Like it's always, what I mean?
We kind of have that now with a Thor node mainnet announcement channel in Discord / Telegram.
Yeah.
And that's the way we tell people that there's a vote to begin with. And everybody who runs a node or operates a node should be, be very closely tied to that channel, if not to make votes, but also to be aware that there's some sort of issue, either because we need to reset the Bifrost cache on these specific 10 nodes in order to finish the Solana trade that's currently stuck, or because there's an exploit that we're aware of, and we need to pause trading because there's an ability to extract funds. Like that's our kind of alerting channel that every node operator should be tied to the hip to that channel.
Are we being a little comfortable with Discord? Maybe we should have a communication redundancy. That seems like an attack vector to me, right? If everyone's, Discord, what if Discord just goes away one day?
Well, yeah, Telegram. There's a Telegram group as well that automatically posts to Telegram as well when you post in Discord. So it is replicated. But if like Discord were to get, a bit irie with us and shut down our Discord channel because they think we're the devil or something, I don't know what that would be, but then we would have a big problem. We have to switch to Telegram or build a decentralized version of that stuff, which I don't really want to do.
Yeah.
Like it's funny, like we are a decentralized protocol, but we rely on centralized infrastructure like Discord and GitLab, for example. And like it'd be great if we had decentralized options for those things. In some ways, in our case, it's very useful. In most people's cases, it's too niche to make sense to build a decentralized GitLab or GitHub or decentralized Discord. It's like it doesn't make sense for most people.
We got to get on Nostr. You
can get on Nostr, but Nostr is also, like, in my opinion, heavily economically flawed. Like it's structurally broken from the design up. But
oh, really?
That's, in my opinion, it doesn't make any sense. But
I'm sure it'll come, though. They're working. People are working on it.
People are working on it, but they're not like. To me, this is the funniest thing about what's his name, Jack Dorsey. Is that he's this Bitcoin maxi, loves Bitcoin. It's blah blah blah, whatever. Like, there's never a reason to have a token other than Bitcoin, right? Like that's kind of the mentality that he has, and some maxis have. But you can't really have a blockchain without a token. Like, it's just structurally, it's broken already. Because at that point, you would just require a federation of trusted individuals to run this for some gain that is nothing to do with the usage of the protocol or whatever that is. And so, like, most of Nostr, at least the last time I looked at it, maybe it's changed in the last year or whatever, but like most of Nostr, like 90% of it was run by the developer who developed it, and he runs it on his private personal server, and he does it for free. And it just, like, economically makes no fucking sense whatsoever. But because Jack Dorsey is offended by the idea that there could be something else than Bitcoin as a token that exists in the world, he won't put a token on it. Because, like, then it just becomes a shitcoin on a shitcoin protocol, like everything else that he shits on and hates. So he just omits the token entirely, and now there's no economic model on it whatsoever. It's just like trust and belief and fairy tale dust that keeps it going, and that's worse than a shitcoin, in my opinion. So it's just like
maxis are borderline Dunning-Krogers. They're just insufferable.
Maxis are the most stupidest thing. Like, honestly, like, there is not a technology that exists anywhere in human history, and I would challenge anybody to come up with an example where there's a technology that only has one use case. Like, you can only do this one thing with this technology. Like, fuck off. Like, almost every technology is used in an infinite number of ways that it can be applied, every way that it can and will be applied. Like, the idea that a blockchain can only be used for Bitcoin only and it can't be used for any other purpose or value is absurd. It makes no logical sense whatsoever, other than your ridiculous tribalism that is founded on your own personal wealth. Like, it's a crazy thing that we get so engaged with, like, sports teams, for example. Like, oh, I love the Red Sox, or I love the Celtics, or whatever. Like, I'm from Boston, so I'm from that world. And people get so engaged in these things, right, mentally. But if you throw on a financial, attribute on top of that, like, it made you money because you invested into Bitcoin and you made a bunch of money on it. It's like that, but like times 1,000. And so people have this extreme view on the tribalistic perspective, all because, like that guy from What Bitcoin Did, what's his name?
Peter McCormack?
Peter McCormack, right? Peter McCormack, when he joined crypto, he was all about crypto. And then he got into the 2017 era, the ICO, boom. He invested into a bunch of coins. Almost all of them failed except for Bitcoin, of course. And then his conclusion from that is everything's a shitcoin except for Bitcoin. But, like, I think the fundamental thing that he's missing is that, like, that's fucking technology, dude. That's Silicon Valley as well. You can go to Silicon Valley, you can buy 1,000 different fucking stocks or coins, and 97% of them are going to go to fucking zero. That's how the fucking planet works. This isn't unique to fucking crypto. It's just how it works. You invest into low market cap, assets like fucking penny stocks in the traditional sense. There's a good chance it goes to fucking zero. That's just how it is. How any market is. And for some reason, crypto is this unique fucking, like, unicorn that it can only exist in this way. Like, the Bitcoin can be the only thing that exists. Dear fucking God, get a fucking brain cell and understand how any other market has worked in any time in history, then come back to me. Thank you.
I totally agree. Totally agree. Technology can be used multiple ways. Toilet paper especially. Toilet paper is more for wiping your butt. You can throw it at your neighbor's house if you don't like them. I mean, there's so many different applications here. You know what I mean?
You can use it as a muzzle on your gun. Like...
Yeah, a little toilet paper silencer. Absolutely.
Toilet paper
silencer. Pragmatic Monkey. While you're here, so I know you kind of felt, hopefully you don't feel like a fourth wheel here because we've just been shooting the shit here. But Zcash is coming online, right? That's really cool on THORChain. I don't know if you know this, but, like, let's say there's big design. Hey, we want this on the app layer. How long does that take for Hans or whoever to maybe add support for an asset like that?
In theory, it's fairly fast. It has been time, like, we still haven't had Solana because we want to institutionalize the process. We want to have a clear tooling that allow us to, in a few clicks very efficiently create a new market, spin out a landing vault, and connect everything to the API as it should be, and get the logo and all those things like all in one place. So it's a lot of manual works, parameterization, all that. So we are just working on an orchestration interface, and that will allow us to then provide support much faster. So that's also something coming. Maybe Zcash will be actually the reason that accelerates us to focus on that. It's always the same thing. Like we have so many different things we are doing in parallel that it's just a matter of where do we allocate our time. But for now, it's the key focus has been really on CCLs, getting that up. We are still refining a bit. We are going to make a few changes to the contract a bit, but mostly to the UI. And then we are going to start to push it more, and we'll turn our focus to something else. But yeah, definitely excited to get Zcash, XMR, all those new tokens, and give people opportunity to use that at least for trading in more sophisticated way. And where possible, Zcash I think has enough centralized exchange liquidity to have an enshrined oracle. I believe it may already be there. Not yet, but pretty sure we can get one. XMR is more complex. We cannot. But Zcash we can.
We can't get an oracle for XMR?
No, it's only on Kraken and I think Binance, but not Binance US, and US nodes cannot get Binance in the list of providers. So, and you minimum of 3 whitelisted centralized exchange providers, so you cannot get Monero. I think long term we should find a different way. Like we should have a way to support, if there is sufficient liquidity, at least with much less risk profile. So you would just cap, for example, the liquidity you make available to borrow get XMR based on the liquidity that is available inside the THORChain ecosystem, so base layer plus app layer liquidity. I think that's something we could explore, but it's we will need to have a dual design for oracles, like having kind of official blue chip oracles, and then
what if
ecosystem
become the primary source of price information for Monero?
But that makes sense. Like we just need to get Star Squid to add THORChain as a provider, and
back into Oracle itself.
Yeah, exactly. And self oracle. But then we have the top price, which we can use as an oracle.
But there are like Let's Exchange. They do Monero. Can you get a price feed from them, or like Changely or Change Now? Can you get price feeds?
Change Now. I don't think they are exchanged. No, they are just interface that aggregate liquidity from different sources. The other one, I forgot the name. Lex or what is
Let's Exchange.
Let's. Yeah, I don't know. I mean, maybe Chad, you know better than me that, but I think the whitelist of exchange is fairly restricted for enshrined oracles, and I don't think this one is on it.
I mean, you have to remember that like whatever source you're getting as your oracle information, like whatever your data you're getting from, the amount of liquidity they have is a way of measuring the quality of that source of information, right? So if it's very low liquidity, like let's say Let's Exchange, I have no idea what their volume is, but let's just say it's very small. Then using them as a source for oracle information is kind of shitty because it's very easily pushed in one direction or the other, versus Binance or Coinbase being these massive things. They're really the best sources, And to be honest, whatever they say, Let's Exchange or whatever these other things are just pulling it from them in the end anyway, right?
Yeah,
so it's having 15 different places to pull your oracle price from, which in some sense is a good thing, and in some sense it's kind of pointless. It's complicated, I would say.
At the end, the issue is it's all based on trust. Even like so you trust a bit more Kraken or Binance, but at the end we have no way to verify which liquidity they actually have, and if the pricing they are offering is even true. Like you don't really know. I mean, you trust their API, you don't have measure of liquidity, so it's already quite risky. If you go on the lower end of the barrel, then you become even more riskier. Like actually they could even the exchange itself could collude, or just one could just move his price, his API a lot, just to manipulate the oracle, steal money, like borrow on the app layer at an overly inflated price from the oracle they control effectively, borrow this money, and then crash the price or resume the price to whatever the market is, and now you get bad debt. Like so, you have to be careful with the source of pricing.
I'm
So
hoping it's
what features on app layer will not be available to Monero because there's no oracle?
Well, no, just landing parts. So no. Well, you will be able. Will probably. You will be able to land it, but the only consumer. You will be actually. We can make it landable. We can make it borrowable. It's not an issue. It's not. You won't be able to use it as collateral to borrow or to do perps once we launch perp. At least not
So
initially.
perp-
Let's
perp
see.
be the main one.
Mhm.
Perps
I
is
think
the main thing. You won't be
no,
able
I
to
think
do.
I think the biggest thing is borrowing. Like I'm sure a lot. It's like Bitcoin. A lot of people, like it's a strong community. I'm sure a lot of
Okay,
people
sure.
would love to be able to monetize their XMR without having to sell them. So being able to log that as collateral and borrow is a great solution for that. But let's see. Like if we build enough liquidity, I think there is a strong case to make at least like. You allow a portion, like a third of the liquidity available in the ecosystem as borrowing. Like we just need to make sure that there is enough to liquidate. Of course, you never know, like the liquidity provider can pull out and suddenly, so if it's protocol and liquidity, it's much more reliable. But if there is enough, like liquidity provider, diversified, like a lot of medium-sized tickets, you can like with a fairly high level of confidence, believe that this liquidity will stay around if markets start to go south, and there will be capital available in the ecosystem to liquidate safely if price move below whatever is a safe level of adjusted LTV.
You guys know what level we're at right now? We're nonchalantly talking about XMR lending. You know how crazy that is? We're just saying it like it's an average sentence.
It's normalized already.
Yeah, it's normalized already. Like we are really messed up as humans. We do not really appreciate amazing moments because I'm just
That's
like,
how
oh
it
yeah,
is.
XMR lending, and I'm just like, wait a minute, like this is incredible. Like what the
It's the same
hell?
thing, and like you get excited about the Bitcoin price because it hit like 80,000,
Yeah.
and then like 2 months later it's back to 80,000 again. Like what the fuck? Why? You know what I mean? Like
so over. It's so over.
I'm so over this. It's funny we normalize our current situation so quickly.
It's so true. It's so true.
Yeah.
That's
true.
cool.
Could the pools? So the pool on THORChain, Monero pool on THORChain, it could get big enough to where you could maybe get comfortable that okay, this is stable, and you could then unlock lending on app layer.
Let's say up to
Especially if
25.
it's protocol own liquidity, and we know it's sticky. It's not going to be withdrawn.
Yeah. So it will be limited, but like probably you can go safely. I would say with the XYK pool, especially 25-30% max of your TVL. You could put that as a borrow limit, and it's very like things should be all right. The issue is, of course, I mean, you just need to make sure like people get liquidated over time if price keep going down and down. But yeah, I think it could be possible, and probably like we'll have to see how we do that. I guess first we build the base and we refine and how we can optimize what where there is demand to use certain things. But I think we can do a system, for example, of isolated markets where we can spin out a second instantiation of the credit account contract, but that only take this collateral and has different limits. It's I think one easy way technically to do that and be more conservative. What you don't want to do is we have currently like this big one contract that takes Bitcoin, ETH, and a few other large cap as collateral all together. You don't want to put into that mix collateral that has a much lower liquidity and that you won't be able to liquidate safely. So it's just a matter of making the right call in terms of which assets, which collateral we allow with which cap, and which one we can commingle together, and which one should stay separated. But I think technically, like it's not, it's totally doable once it's available as a secured asset.
Yeah.
Is there anything else, guys? Man, we've covered a lot of ground in this podcast. This has been a great episode, very healthy conversation. I'm so glad we did this. And again, Pragmatic Monkey and Hans, thank you so much for coming. Oleg, thank you for joining as well and putting your input. Man, I think we did it. We covered a lot of ground here. Very exciting. And Chad, thank you very much. Hard work. I see. I'm trying to think. I'm looking at my questions here. I think I'm about expired. I know Hugin's still firing away. I love the AI tooling. That's huge. Anything you can think of, Chad? I think I'm about out of things, honestly.
No, I mean, I haven't spent a lot of time working on Hugin just because I've been busy with other things that are more protocol directly related, like major features, or whatever, and Monero and whatever. So that's just taking the main stage, and I haven't put much time in it. I do want to go
As it
back to it
should.
as it should, and I do want to go back to it and evolve that even further. In the end, the idea is it should become a full stack, full integrated software engineer from end to end, and be able to do the entire process autonomously one day if we can get there. But I just haven't had the energy or time to like further develop that and get that going. But once I get these major features done in Monero and TAO and these kind of big things that's like currently being juggled, I can switch over and put some more time and energy into it.
Did we give a TAO time frame? I'm sorry if we didn't. I don't remember.
TAO timeframe. So the good news is that TAO had already merged and put into 318 the state chain stuff, which basically means that as soon as TAO's code base is ready, we can cut 318.1 or 318.2 or whatever, whenever we feel it's ready, and just go ahead and launch it. There's a possibility that it'll get launched alongside Monero. Like that might happen, that both of them will get launched at the same time. Maybe not. It just depends on how fast the chain net kind of testing phase happens and how many bugs you find and how many fixes and patches has got to be made. And so it's really hard to estimate. But I would say that we should be like live with Monero. I would say, and maybe, I said end of May before early June. I think that's still fairly accurate. Maybe early June-ish at this point, for Monero. And it's possible for TAO to get in a similar time zone, but maybe a little bit later just because, we're focusing more on Monero as a more important thing to spend our energy and time
Sure.
focus on versus TAO. So it's kind of getting the kind of preferred treatment. So it might be a little bit longer than that, but we might hopefully get them both delivered and running live before 319 is comes out, hopefully, which that's going to be cut on the 14th of June, I think.
Pretty wild.
A month
Pretty
away.
wild, guys.
4
Yeah,
weeks.
about a month away. But then it takes like a week or two. We have to go through the exchanges and
Yeah.
we have to freeze the code. They have to look at it, which I fucking hate. But that's the current
When we
agreement or
become the deepest part of liquidity anywhere, we will we don't they if they make a code change, we'll have them wait a week.
I do want to renegotiate that. Like I'm quite unsatisfied with the current kind of like agreement we have, and I do want to go back to some of these exchanges and kind of renegotiate the terms, and not really apply their 1 week or 2 week kind of restraint on new code unless it's changing something that they interact with, which is like basically the rune token directly, either its
Yeah.
supply or its ability to look at balances or doing transfers, which those things like never change. Those things are like very rare. Like we changed it in the last release for a very unique reason, burning all the rune in the reserve, or at least the majority of it. But except for that one particular release, we haven't touched any of that code for such a long time, like years. And so it makes no sense for us to be like delaying our releases just because of it might touch the rune token at some point. And it's just nonsensical. So I want to renegotiate some things.
Yeah, I think that'd be great if you could pull it off.
Another thing I'm trying to find time to do.
Yeah, you have no shortage. I'm sure your list is a lot. Go ahead, Ken.
All these
I
things
literally
add
have
up.
I literally have dozens of Telegram messages and groups and DMs, legitimate DMs and legitimate, like not like spam or whatever, like dozens that I haven't even read or replied to because I've been busy in other things, and but I gotta find a way.
I feel that.
I gotta start up like an open claw or something like this. Maybe that's what I gotta do. Just start like open clawing it up. But I'm also scared of that because it's like that. There's like so many security implications of that I'm just like, I'm not sure I want to touch it.
I felt that. I felt that. It's like someone, because a lot of people come to me with questions or concerns. Like, guys, it's overwhelming sometimes. And if I take a while to respond, please. It literally just got lost in my never-ending list of just DMs, between X and Telegram and Discord, and oh my god. So you know
Just
how it is. But
nonstop.
Kenton, were you gonna say something? I felt like you were gonna say
No,
something.
no, just saying it's like it adds up. Like I'm the same way.
Yeah.
I've got 30 things on the go at the same time here, and you kind of just have to stop. 'Cause what happens is none of them get done because you're kind of jumping
Yeah,
back and forth all the
yeah,
time.
you
You
just
kind of just
jump.
have to
Yeah,
kind of burn those other things off for a while and just focus on one thing for a while and get it done. And so that's what I've been doing with the website. Like I got to just get this thing done and out. So it should be live next week. So there's some news. So that'll hopefully get a lot of take off bandwidth, free up some bandwidth in my brain so that I can start focusing on other things.
I
Yeah.
try
Some
to
other
work
good
on like
news.
nights and weekends just because that's the time that like I don't get as many
Me too.
interruptions, and so
Same.
like I can on the weekends especially, I can just like start like focus and like get some work done or code whatever, and I don't have people like constantly DMing me for questions or comments on this or whatever.
Well, you may have noticed it, Denny, you too, that the several people that I'm working with, I'm texting them all the time and at night and on weekends. I'm always, and I feel bad because sometimes they reply. I'm like, I don't expect you to reply right away, but this is when I have time to stop and think and get
Yeah,
stuff out. And so, yeah.
I get it,
Yeah.
man. I get it. And it's some positive news. I'm not going to say the team or disclose anything, but Chad, just so you're aware, one of the teams that we did talk with at the conference, man, they have just jumped right in integrating THORChain. They've already got some features live, and they absolutely love it. By reading what they've said, they're just super impressed at how well it works and things like this. So just a little serotonin hit for you over there.
We were in a
I was
Good
gonna
job,
say, but
guys.
okay.
it's you and I had a meeting with them like a couple days ago.
Why can't we say who? Why is it private?
Oh, I don't know.
why
I didn't. I don't know. I just said that. Maybe I'm dumb. I just said, but
No,
no, they're really cool
GPT,
team.
right?
Nano
Yeah,
GPT.
Nano
Yep.
GPT.
Yeah,
Nano GPT.
yeah.
They were perfect because like if you're not familiar with the project, I think they're coming on to the pod on a Saturday, like next month or something. And they had a problem where like they ran into an issue where they used centralized exchanges to do trades for their service. And they got like $8 from like an Iranian wallet, according to some government. That's an Iranian wallet, which maybe that's true, maybe it's not. Who the fuck knows? And so they received $8 from an Iranian wallet, and then like the exchange like shut them down entirely. And so like which was important for their business that they have to for the project to keep operating. Silly me. And so like we met them in the Bitcoin conference. We ran into them. We kind of they asked us a ton of questions. We actually had
at
dinner
our
with
side
them
event
as well.
They came to the arcade.
They
F1,
They came to our little F1 racing, and then both of those guys kicked my ass on the F1 racing side. I got my ass handed to me there. And but they had a bunch of questions. We answered them all, and they got really excited about what we do, like our worldview, or how we think about trading, whatever. And they integrated it, and like they said, it was like really smooth, really easy. It's like they're very happy with it. And then they were asking us about, well, we can take a lot of different coins as payments for NanoGPT, like Bitcoin and Ether or whatever. Like, should we do Rune, right? Should we add Rune as one of the payment options to pay for their service? And so they're actually thinking about even deeper integrations than just a swapping mechanism, but actually integrating Rune itself into their platform, which is kind of crazy.
And I want to
What do they
apologize. I said, well, real quick, I said Chat GPT like an idiot. My brain. I'm sorry, guys. 2 hours. It's Nano GPT. I'm sorry. Go ahead, Chad.
NanoGPT.
Yeah.
They're an AI aggregator.
Mm-hmm.
So you go to their interface, and they have access to all the AIs, and you can choose which one you want to use, and you pay per prompt. So you don't have to pay a subscription. You just pay for whatever amount of time you want to use.
Yeah.
And then you can pay in all the crypto they support. I don't know. I can't remember if they take fiat or not.
I think they take fiat as well, if I'm not
Okay.
mistaken. But you can also pay with Bitcoin if you wanted to, or other assets.
Yeah.
Stable coins.
That's a bit like Venice. Venice.ai from Eric Worth.
A little bit like Venice, a little bit like T3. Like there's a bunch of conceptually similar products out there that connect you to multiple different LLMs.
Yeah,
Crypto native
using LLM.
That's
very cool.
Perplexity is another one. They're all like they're not the same. To be fair, like Venice is not the same as Perplexity, for example. They're structurally different, but they do give you one kind of interface to interact with many different
But
LLMs out
Perplexity
there.
is very much Web 2. Yeah, okay, it's quite cool that they
Yeah,
take
it's very it's
crypto
yeah.
payments.
Perplexity is definitely Web 2.
What I
And
thought
what's-
was, for me, what I thought was cool is that they're doing micropayments, and that THORChain can serve that. And I actually,
Yes.
I up until that point, I always kind of thought, I don't know if THORChain can really handle the small end. It's probably better. We need a few $100 type trades. I didn't realize we can actually handle those $5, $10, $15 trades for them, no problem. So that's huge too. That's great.
Yep. As long as you're above the dust threshold, which we have a dust threshold for every chain, and it's different per chain, depends on the circumstances. And by the way, we have that because we got attacked by a not on purpose necessarily, but just the outcome. Sometimes like chain analysis companies will just like throw like a few sats in like tons of wallets and then just watch where the sats go. Like they'll just give people Bitcoin for free, basically, like a small amount, and then they'll see where the sats get sent to if they redirect it to another wallet. So then they know these two wallets are connected, and then they can just improve the graph of like, okay, these wallets are owned by this person and these wallets are owned by that person, and that's part of the thing. So THORChain got attacked by this in 2020, I think it was, or 2021 rather, and we actually had an inability to spend the UTXO of this little sat thing that we got, because it was like there was no miner fee in it, or transaction fee more accurately, and so like it was not getting mined, so to speak, so we couldn't churn, and so we had to do a child pays for client, parent pays for child like a bunch of times, like 100 times, to up the value of the transaction. It was just like I want a disaster. That's probably too extreme. It was just a pain in the ass of what it really was. And so we actually put like a dust threshold. We just like ignore everything that's under like 1,000 sats or 10,000 sats, whatever it is.
Yeah.
Oh, so I
makes
thought
sense.
I thought we had a minimum $100.
That's
Bitcoin
BTC
trade.
specifically. Yeah. That's my
Well, that's a
understanding.
lot
too,
more
is
than
that not-
1,000 sats.
I think it's 10,000 sats is the dust threshold for Bitcoin, which I don't know how much 10,000 sats is in dollar terms.
Maybe that's $100 now, Kenton, or it was when it was $100,000. Maybe that's what we're thinking. Do some math.
Sats in
$6.60 looks like. A quick little Google.
$8. 10,000
$8.
sats is about $8.
Yeah.
Um,
That's probably the highest dollar threshold we have is probably going to be Bitcoin by a good margin.
Yeah, I think that's right.
Okay.
Yeah.
Are memo lists confined to $100? Do you have to do a minimum $100 memo list trade?
The memo list is still confined to it. Like you still have to do above 10,000 sats.
Yeah.
But that 10,000 sats, I like that number 10,000. The memo is the identifier is used in the 9,999 and below, minus a zero. So like we actually use the space of the dust threshold to embed the identification number for your memo list transaction in our system, in our design.
Okay.
So if the dust threshold was like at 1,000 instead of 10,000, the memo list would have to be reduced to under 1,000 at that point.
Yeah.
And that would be problematic for its own reasons.
Okay, so I don't know where this $100 comes from in my mind, but obviously it's wrong.
Yeah.
I remember that too, Kenton. So don't feel bad. That's I'm
But
confused
to your point, you can do micro trades, on THORChain. You just have to be aware of like the gas part of it, right? You don't want to do micro trades with Bitcoin because it's very expensive. But you can definitely do micro trades with like base chain, or something like this where the fees are extremely small.
Well, we were talking. Randy and I were talking to another wallet there. You can make the call, Chad, and they said one of their biggest routes they think is Solana and Polygon, and
interesting.
And I think they do a lot of small. Oh no, they're talking about time. That's right. So my brain's going on a wrong tangent. I'm just gonna stop talking. This has nothing to do with our conversation.
That's awesome. Yeah, 2 hours, guys. It gets pretty tired having to listen and talk the whole time. So I said Chat GBT. So I'm off as well.
I wish I just had a button that was like Kenton, like stop talking. Just kidding.
I think a little
Just kidding.
topper for those nano boys. I think it's great. The reason why this matters is they get a special discount from the people, the AI company, so they actually charge the same price. Why that matters is because they don't require KYC. So this basically enables anyone in the world to have access to these AI tools. You know what I mean? A lot of people they cannot provide KYC, and so I think these boys are onto something. Simple idea, but I think profound product market fit consideration. So I'm so glad we picked those guys up. They're super cool. Awesome dudes. Awesome dudes. I can't wait to talk to them.
It's actually,
Yeah.
it was a really good, it's beautiful because this is the whole point of doing these side events and going
Yeah.
to conferences is to make these connections, these relationships. And like it happened after our first one. You know, can you imagine when we put some more effort into it and people are bringing their friends and, you know, the networking effects, the human networking effects take off. And this is what's great because then they'll come to the next side event. There'll be another project there. And like, oh, how do you know these THORChain guys? Oh, we came to the last side event. And then we heard it, you know, and we integrated them. It was so easy and blah, blah, blah. They're our salesmen. We don't have, Chad and I don't have to talk to anybody. It's that social proof, right? You know, it's our product. We're going to sell it all day long, right? And the buyer is like, okay, well, obviously we're biased, right? But when they talk to somebody else who's actually bought our product and used it, and they're telling telling this person how great it is, it's way huge, way bigger, way more of an impact on the sales process. So, yeah.
So true.
Yeah. Couldn't have a better outcome from Vegas. It was so good. I'm so glad we did it.
It was so good.
Looking forward to doing more. Yeah.
I remember
because
because
put money into it. Like we had like bigger parties and we actually advertised and blah, 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 rather than just like us just kind of throwing some things together on our own.
Yeah.
We could get some really good engagement, you know, and spread the gospel, so to speak.
Yeah.
THORChain nightclub.
We'll get
THORChain
there.
nightclub.
Our parties will get to the point, invite only. You got to ask us for permission, but people are begging
You have
us
to wear
get
the
in.
THORChain shoes. Chad Bearfall, we have to have
THORChain
specific shoes. You know what I mean? The
THORChain.
Thor fight one.
I got my Thor Force one still.
You got to wear a T-shirt. You have to believe in the prophecy of Threeth.
Yeah,
we gotta do it at like in Vegas we would do it like at a club, like a like a nudie club, so to speak. Then everybody's gonna be
Absolutely.
coming to that shit.
Absolutely.
You know what I mean?
Well,
you get one free lap dance and everybody's
and
coming.
you have to wear
and
pasties, rune pasties all over yourself. You know what I mean? This is great, you guys. We're
Crazy
really
about
going
consensus
here.
in Miami. The conference ending party was at a strip club.
There you go. That's people are gonna go to that.
That was their official party for the end of the conference. It was a strip club.
We gotta
Excellent.
get them like THORChain like panties or something. You know, so they're
Absolutely.
dancing with like that would be like the most effective like advertising.
Will they be edible? Will they be edible? We're gonna get this podcast taken down. At this point.
Pragmatic,
We're gonna
he's
calm down.
French. He can help us get some good
None,
lines.
none of this
Yeah.
is going on the record now.
Yeah.
I got good source.
Yeah.
Funny.
We actually were thinking that it would be really cool. By this is something we can pull in the community for. Like, if you're interested in doing this, we were talking about this before in Bitcoin, the Bitcoin conference. Is that like we get something like a THORChain hat, for example, and we just get as many people as we can from our community to come and wear the hat. And so when you go to the conference, there's just like a ton of people wearing the same THORChain hat, and that's probably, like, in my opinion, as a non-marketing expert, that would be so much more effective as a marketing campaign, because booths you expect to see and you'll look at it and you'll walk by and maybe think very little of it. But if you see like 100 people running around this fucking conference with this like the same exact THORChain hat, like that's going to stick out in your mind, like inherently so. And maybe it says like, ask me about THORChain or something like this, right? And you start engaging with people and like ask, oh, what is THORChain? You start engaging with people, like in our community comes together, grassroots kind of style comes together, and we like have a very successful marketing process while not spending that much money to achieve the outcome.
And Kenton, you'd
you're
have a
absolutely
QR
right,
code
Chad.
on the back end. So it'd be like this, like, ask me about THORChain, then QR code right here. Swap.thorchain.org. That's the way it would be right there.
That is a good idea to have a QR code. I like that. I'm gonna write that down.
I'm gonna get the QR code like on my tongue, so that I can walk
Yes.
around. People can like take a photo, right?
Your tongue
That's
everywhere.
awesome.
Nice.
Yeah.
Yes.
Love it.
Do you
We're
guys think
baking in
that
real time.
So in my mind, if somebody sees a QR code, it does strike their curiosity, like they want to find out what it is, or well, actually, not. Let's say this out loud. I've had people tell me never use, if you're especially at a crypto conference, don't scan someone's QR code on their phone because they could be hacking your phone. Would we risk that people wouldn't do it or be scared to do it?
I don't think most people are not going to be aware enough to think of that, but that's true in some
Yeah.
sense because you're going to some web page and that website could have, like RCEs or something like this,
Yeah.
right?
Yeah.
Remote code execution. So it is theoretically possible, and people shouldn't probably be doing that, but most people are not, privy enough.
Yeah. So it
Especially
should
at a
be
Bitcoin
fine.
conference when
So
people aren't even technical.
Link to STO. Well, I mean, our site's safe. We're not doing anything.
Yeah.
Of course. No, of course.
Yeah. So if they want to be cautious, they don't have to do it. Most people do it. They don't care. They're happy. They trust it.
At a DEF CON conference, like nobody would scan it because everybody there is privy enough to not even join the fucking Wi-Fi, let alone scanning the QR code.
Yeah. But the thing too is, if you're at a really significant like conference, like the Bitcoin conference, I mean, you have to pay to get in, right? So like you ain't like just some random guy on the street. Like you've got capital invested on this. So, I mean, you could make the argument that, you could scam people that way, but there's like a layer there where you're just not like some random guy. I mean, you've got tag, I think it's a good idea. I like it.
Yeah.
Yeah.
Well, we'll talk about it more in the future.
So Boone said he's going to work on a store. We've got 2 stores, but I gotta be honest, guys, I think we can do better. If anyone in the community is listening, you want to make a little side hustle, especially if someone out there is like if you're in a developing country and, making an extra $20, $30 a week or month is a big deal. Like make this store, make a drop ship store. You don't have to spend anything but your time, and you take the THORChain logos and stuff, put them on the t-shirts, and then you set your price. Once you create the store, send it to me. Send me the link. I'll put it on our site. And, it'd be nice to have a few of these stores, right? You guys want to compete a little bit. And then you keep the profit. I don't want to, it's your profit. And then I would love to buy, if somebody's going to a conference. So it's Denny, you're going to a conference. You can go shopping, go to these stores. You go buy the swag you want, and then I'll pay you back. And making that offer to anybody out there in the THORChain community. You want to go to a conference.
If anybody's looking for like a product idea, this is the perfect product idea for THORChain. If you want like something, is THORChain branded condoms. Wrap your ding dong, not your Bitcoin. You know what I mean?
There you go.
Like that would be like the perfect, like you could just pass them out, at a conference, whatever. Like, and people would obviously, I would maybe not use them actually. I don't know if they're actually if they're any good, but like it would be an effective, product. Do not actually this is for demo purposes only. Do not actually, rely on it. It's made from lamb skin or something like that. Like
lamb skin,
1300s style condom.
It's a lizard skin condom. You know what I mean?
That would be funny if it was like a condom from like the 1200s. Like ding dong, not your Bitcoin.
The shredded skin of a snake, you know what I mean? Just like use that. Oh yeah,
that would be. I'm gonna look into that. That'd be hilarious.
That's good. I like it.
That would actually be easy because I'm sure we could buy like a few thousand and just have buy them in bulk, and we just have them.
You buy them in bulk.
Years.
But not that expensive, to be honest with you.
Yeah,
and you just like start passing them out at a conference like this.
I'm sure you could. Yeah, let's see here. I'll look into it too.
And like everybody's gonna remember that you got a condom. Like if you get random, you know what I mean? Like it's like, oh, I got like a keychain. You know what I mean? Like who the fuck cares? But you got a condom. It's like, dude, this guy's hanging out fucking condoms over here. That's fucking crazy.
on the hats, Kenton, here's something that I have noticed is that the hats. This is probably when you want to spend a little money. Like if we're gonna do like hats and get people to wear, you know what I mean? Like or people can use stores. Like they got to be high quality. Like because a lot of the hats I give, they're kind of like frumpy and they're lumpy and they don't look good. You know what I mean? Like they got to be like they got.
Well, dude, this is what I mean.
Sharp.
Like this is nice with drop shipping is it's the end user who pays for it, right? You just have to find the quality and then you just slap your logo on it. You don't have to pre-purchase inventory. And so I completely agree. Same with t-shirts. It's got to be a nice shirt. You got to want to wear the actual shirt to be comfortable. So maybe if someone will have to buy a few shirts just to kind of maybe to test them.
Try them out. Yeah.
I was actually thinking about you, Danny. Like with your hat, we got to get rid of the Hurley logo and get you the
I agree.
THORChain
100%. I've asked this actually. I'm glad you brought this up. I've asked. I want a flex fit hat, you guys. Maybe I'll make my own store. F it. But I want a flex fit hat. I don't like the button up thing, and I want it to look good. I don't want to show up on a hat where it's like all lumpy. Like I wore a Shapeshift hat. I love Shapeshift, by the way. I love Eric Voorhees. But one of their hats, like it just doesn't look good. You know what I mean? Like that's aesthetics matter.
Did you call it flex fit?
A flex fit. Yeah, that's what it's called. Flex fit.
You know what would be crazy, actually? This is a crazy idea. Probably really dumb, but awesome at the same time. Is THORChain branded contact lenses. You get like laser eyes? People get that, like, don't even talk about on Twitter. You get contact lenses with the THORChain fucking logo, and you're walking around, people like, what the fuck? Like, that would be like shocking. Do you know what I mean? Like, you would be freaked out if you were walking in the conference and like, oh, dude, there's a fucking guy with like THORChain logoed eyeballs. You know what I mean? Like that would be like, that would grab your attention so effectively. I mean, probably irritate the fuck out of your eyes, but like other than that,
but it'd be really cool.
That would be crazy. That would be like an awesome, I couldn't do it because I don't wear contacts, and I would probably destroy my eyes if I did. But like, I think that idea is like hilariously funny and probably very effective.
I think we're going to just do a bunch of things, and we're going to find something that works. Between hats, condoms, and contact lenses, I think that's a friggin' huge variety right there.
Somebody walking out with condoms and the fucking eyes in a hat. Hey, guys, want a condom? Say,
cult. THORChain cult. It's happening, guys. I love it. Awesome. Are you guys having fun out there? We're having fun. I just love talking about random stuff. This is so cool.
That would be, you would be like, people will be taking photos of you and putting you on Twitter. And now you're even getting outside of the conference and people are like talking about you on Twitter and shit. Like that would be so effective of just like turning heads and getting attention and getting people to ask the question, what is THORChain?
It's all about mind share. You know what I mean? I know like the Cybertruck, the one thing that's interesting, Kent, is the Cybertruck. I know that's kind of like an end stage, like marketing thing, but it was so funny. Was it Zcash? They had 3 Cybertrucks, all there. Like, I guarantee you we influenced that with just our idea. They just took it to the next level, right? So like, yeah, let's just have fun. Let's just do a bunch of stuff. Like, you never know. You never know what hits, right? And I think these are great. These are hilarious ideas, and F it. You know what I mean? We're here for mind share. That's what we want. So
yeah. And you got to stand out, right? That's the thing with
you got to stand out. That's what it's all about.
Yeah, you have to stand out.
Standing out.
Some things we do might be not. We might stand out in the wrong way, but that's okay. So,
but even if it does, it's like even if it does, that's still positive in my view.
Exactly.
You know what I mean?
But it's just like we were talking earlier about app layer and trying this WASM 0 fee. We got to just try it and see how it goes. Same thing with marketing. We just try some things, see how it goes. Some things will work, some things won't, right? And then we get our feedback and we know how to adjust. So, but the key is we have to dare to be different. And that's the only way you get attention in this world, right? So yeah, I love your idea, Chad. People running around the conference and just sticking out like that. I think
I think that's so much better than a booth, and booths are so expensive, and it's just like I don't know. I've never actually bought one or whatever, rented one or whatever, like myself personally, but I've just never felt it really. Actually, I met a guy. I was playing blackjack in Vegas at the conference with my friend Randy, and there was another guy who was playing blackjack with us, just some random guy, also part of the conference, and he was a marketing guy. And he said that at one conference they spent $4 million for marketing. And I asked him, like, I think they did like free Bitcoin or something like that, like something crazy. And I asked him, like, was it worth it? Like, did you get more than $4 million worth of, attention or revenue or whatever it is? And he says, oh, absolutely. We made much more than we spent in that case. I was like, oh, okay,
really?
That's interesting. Yeah, that's what he said. Maybe he's full of shit. Like, I have no idea, but like, that's what he said.
Well, I think it's one of those things you grow into, right? And I feel pretty strongly we'll, as our way becoming the 3th, or once we get there, like we're going to have to do these things just to stay relevant, and almost in a way to like displace someone else from doing it. We just have to be omnipresent, and we got to just dominate and just maintain that presence. Because if we get to the point where we're kind of like, oh, we don't have to do anything anymore, someone else, that's the edge for someone else to get in there. So a lot of it becomes just defending your position instead of growing it. So, but I'm amazed he can actually measure it, because I don't know how you'd measure that from a conference like that.
Yeah, I have no idea. Like, I didn't get the specifics of it, and I just, I wasn't going to get into a debate with him either at
It
a
could.
blackjack table.
I wonder if it's like he had like a one-off introduction or conversation that one
Maybe.
thing paid
That's how.
for it.
Yeah. Right.
Maybe.
Yeah.
Maybe.
Yeah. Good idea.
Because that's what I was thinking too. Is that, like, I'm sure he gets some special treatment from the conference, and maybe he met some other people backstage or whatever, got some good introductions, which led to business, right?
Yeah, probably.
But I can't
Hopefully.
imagine just regular foot traffic is gonna, get him $4 million.
Yeah, I have no idea how he counted it, but that's what
Yeah.
he said.
Yeah.
This rando guy that I happened to be playing blackjack with.
Yeah.
Yeah, Soda in the comments, he's saying, I guess apparently XRP, they spent $20 million on, you saw XRP everywhere in Vegas, right? It was on all the big screens and stuff. And so,
Yeah.
it's just exposure.
Holy
Yeah.
shit.
Yeah.
Well,
crazy.
so
I can't imagine that. Wow.
what I would love is to have Times Square, get THORChain in Times Square at some point. That'd be
That'd
cool.
be awesome.
Yeah.
That would be awesome. Super Bowl ad, everything, man. Just go crazy.
Yeah.
Love it.
Yeah.
Yeah.
One day, guys.
It's actually, from what I hear, like getting a Times Square like thing is actually not as complicated or as expensive as it sounds.
Oh,
I've
yeah?
heard that. I don't know if it's true or not. Maybe we can look into it just out of curiosity, but it's not as bad as you think.
Well, is it maybe just like one, 20-second clip and that's it?
Yeah, maybe you can just do
No,
like a 20-second clip and be done with it. And
But that's probably.
but you take photos of it and then you put it on your Instagram or Twitter or whatever, and you get
Yeah.
the real value is that part of it, not so much the
Right.
actual.
Okay, gotcha. Okay, I'm thinking you'd want to have it on there for a while so you get a lot of people to see it. Okay, but yeah, the strip,
Yeah.
that was huge, because I was there in Vegas until Friday, because the XRP conference, they're having their own conference like a day or two after the Bitcoin conference, and I was seeing it all up and down the strip, and it stood out pretty good. Yeah.
I have to issue a correction. Soda said the 20 million figure was out of his ass. So I relied on you to be a truth oracle there, Max. Let me down, buddy.
Soda Max is worse than ChatGPT. just a hallucinating shit all day.
Well, guys, what do you think? Is there anything else you think we should wrap it up? This has been a really fun podcast. I've had such a great time. This has been so much fun.
We
What
should
do you
wrap up
think?
the podcast, not our Bitcoin.
That's right. That's right. Absolutely. I want to kick you, Pragmatic Monkeys, or anything you want to say before we wrap it up on the app layer side. Thanks again for your time, buddy. I love when you guys join the Thursday. I wish you could be here every week.
My pleasure, really. No, nothing else. Like, we have covered everything. I think good time to wrap now. It's late here.
Yeah, I'll let you get back to bed, buddy.
Yeah. Au revoir.
Yeah.
Au revoir.
Exactly.
Thanks, guys. Pleasure.
Bonsoir. Okay, guys, we're going to be wrapping it up here. So just a reminder of everybody, if you'd like to become a node operator and need some help, reach out to @Runtard on X. He can help you get set up and find bond providers. For THORChain data and insights, follow @Ray Analytics on X. He does the written recaps on these podcasts. He does a great job. He does it for free, guys. Excellent source of information. He's also been helping Kenton on the side, and I think he's been helping general. The guys really stepped up. Shout out to Ray. We love Ray. And always remember, you guys, the views expressed are solely of those of the hosts and guests. Any action taken based on this information is at your own risk. Past performance is not indicative of future results, and the THORChain community does not endorse or condone illicit activity of any kind. This Saturday, I'm not going to be there, you guys. I'm sorry. I have my civic duty. I got to hand out diplomas. But Firo Protocol, I hope I'm saying that correctly. Kenton, correct me if I'm wrong. Firo Protocol will be there with Kenton. I'm really excited to watch that later, guys, so definitely don't miss that. The next week, we're going to be talking with the Kwai Network energy-based stablecoin. We met them. I talked with them a lot at the conference. I'm super excited to talk to them, guys. So definitely hang out for that, you guys. And with that being said, we're going to wrap it up. Thanks, everybody. Hope everyone has a great rest of your week, and you will see Kenton on Saturday. Take care, everybody. Bye now.
Bye.